Okay. So I posted first off that let's take a look. It was like this. There's no higher point to be interested in the downfall than the last point, uh, post I made. And basically that was the high. We'll look at that post, but it reminds me of the 9th, where we considered, where we coasted overnight to my blue and white line that caused the breakout. And, it caused the breakout. Like if I type in caused the breakout, you'll find that this one, it's like deja vu to me, but in the other direction. Like check this one out. So on this other post, the notice my blue and white line caused the breakout. Just like that day, the blue and white line had a very, very, very strong impact. And overnight, it did as well, where it coasted sideways into it and then fell. And on the 9th, it did the same thing. Like if I basically replied to this post inside of the picture, and that post was this, where it reminded me so much of this day. This is a completely different day. You can see it's got completely different ranges and everything. But it started with a blue bar, and it was like everything beyond this blue bar will be taken back to it, and that was the deal. But it went sideways into it, right, and then dumped from the blue bar. Like you can even see it like retested it and dumped. And then here, I'm like, it's really interesting to see that it basically did the same thing with this one, where it had like a rising wedge, just like it did here. Like a little rising wedge, and it blew out of the top and went sideways into it instead. And it was on that blue bar that it made the biggest downfall. It wasn't huge or nothing this time, but it was true that it is it's a pretty decent dump from the highs there, but obviously the report happened after. So let me see. Interesting that we came back to test the 61. That was the node there too. So that did manage to happen. Mm. Yeah, it very well could be. It had exactly a 100% retracement.
Up to the 241. Never went to the 261.
Mm-hmm.
I was just checking the fibs on this. Even the inner, like the one you took there off the blue line, that was off the 241. Short term. Sometimes when it's going down like that, I find it hard to get the fibs on it because there just isn't anything. It just comes down. There's no real distinct place to market the fibs. But
Well, it's interesting when we do get a movement that does undeniably make a downwards move and then a strong upwards move and then another downwards move, but there is a gap in the middle. Like it is like the wave with gap. But the thing is though, is that's how every 5-wave move works as well. So I mean, like, that's why it is a thing. Like the wave with the gap is a thing because it most likely is going to be part of something that is a 5-wave move. And I wonder, like in this case, if it's interested in doing this movement for the 5th wave. Oh, it already did actually. I don't know how to think about that then. That's actually interesting. It did decide to make that the high, but I look at that like, yeah, it could be the M to the W. I just think the red zone's a little bit tough. This node that we have right here, it presents that weird, interesting uh, scenario where we have two nodes. There's one here and one here, and it loves to put volume in the middle of them. I've noticed. I'm curious if they're gonna do that because like look at how it mattered down below, like down here. Why is it the same? Or am I crazy? Like it literally does have two nodes down below that are exactly the same distance apart, right? And I'm like, well, it's true that that is the case. And outside of those nodes, we do have a spike. And I'm like, well, is that spike going to be used in the future? I think that that distance of that spike is actually really important. But hmm. See, the distance between the baseline of the spike is very similar to the distance of the baseline of this. It's not quite the same size exactly, but everything that was through the top was just wicks and spikes. And this one undeniably was the beginning of the uptrend, and it was a spike and it had a spring. So I'm like, okay, this movement right here, I think was made in association with this one. Like that's one thing that I think it's trying to say to us. So I wouldn't be surprised that if we see this follows, which could be looked at as a distance and a time. Like the amount of time that we have to spend doing that distance can be the same, but the exact, minutia might be completely different. But overall, we will have seemed to have made that distance over the course of that time, roughly. Not exactly the same, but it's surprising how much it actually is exactly the same. But I'm pretty lenient with it, And this one here, it said it was to the what the 50. So that's another point for the 50 today. And I'm like, what did it make when it was up here too? I was like, okay, interesting that we can see that this move right here to begin the day is a matter of fact that it turned on the 50. And right here, it's a matter of fact that it turned on the 50 again. So we've had two 50% retracements and then a continuation to the upside. If you remember yesterday, I was talking about this movement. This is a really interesting movement. Uh, it is one that I said we would see more of. It's very rare though, like in the history of overall patterns. Like I think it's more common that we get something like this. Um, and what's weird about this is it is 5 waves, except the third wave that's supposed to be the largest ends up being the 5th wave. Which what's really funny about this pattern is it makes the people of this one lose money because what's the objective of this one? Well, it's to short the 5th wave. And if you try to do that on this pattern, what's going to happen to you? Well, it's going to cause trouble, right? So I'm like, well, that's interesting that's the case. That this puts a lot of danger into the 5th wave. And what does that mean? Whenever we get this kind of, shorter, uh, shorter third wave and it's all like crunched together like that, that amount of coiled up energy is essentially exerted into the 5th wave. Whereas in a normal 5-wave move, it's already exerted a lot of energy to make this third wave. So it's kind of exhausted by the time it gets to the 5th. And in this case, it's like, you know, nothing too exhausted in that environment really. Just a 50 and a 50 could even be 261% retracements. It doesn't necessarily have to be a 50. So it's kind of interesting to see that. But yeah, the spacing of the nodes is quite interesting to me. And I'm like, all right, well, what other things in this area, while we were spacing the nodes this far apart, like what things did we have? We had this spike, and I can see that hold on. I'll do it on a fresh chart, just because I know we've got some ranges on here. Let's take a look at this one real quick. It's fresher, but basically we've got a node here, and a node here, and then a node here and here. Suspiciously particular. It's bothering me that that's not, whoops, that that's not flat like that. So like that. Yeah, that works for now. So I'm just basically highlighting that, and what I'm going to do next is going to have a little bit more precision on the area. So it's true that this area had a high and a low, and we could say that, you know, this can encompass the range that we've used. And I find it remarkable because if I just simply circle the area that it was consolidating, it did start with a spike like that. And it's very interesting to me to see that that spike was replicated on the bottom. I know it didn't look exactly the same, but you know what's interesting? Did it not follow with this movement? And that movement is what we had here. So this was related to this. And this, which looked different, was related to that. And basically, this spike out of the bottom, I'll show you how it was related in reverse. So we had that spike out of the bottom, and that spike was there out of the top. Interestingly enough. And then we had this movement here, which I can draw as a square even. And we produced that right after the triangle. So it is a fact that it's, you know, this amount of space, maybe not that much time, but that much space amounted to this much pullback. And it's a fact that that happened twice. And look at where it happened though. Well, it's like we have one on top of the red zone, and we have one on the bottom of the green zone. So like it's like they're sitting on top of these levels. One of them for this node and one of them for this node. So I think that that's quite remarkable. And then the distance that's in the middle, so you notice that we did one thing here. This is like exhibit A, you know, we did one here and then we did one there. Did you know we did another one here? And it was weird because if you look at the distance that it decided to make, it's remarkably similar from the distance that it did before. And it's almost like it had the square first. But it's true that, you know, if we were to look at each one of these triangles and squares as its own movement sequence, and until it's done the triangle and the square, it's not going to do anything else. So we know that until the triangle and the square is complete, we can't think it's going to be really interested in doing something else. So this is one, you know, this is two, and then this is three. And you can see how they're positioned. You know, one at the top, one at the bottom, and one in the middle. And, you know, that reminds me of having a consolidation here, having a consolidation here, and then having one of those in the middle. And it's like, yeah, just like today, it's just so happens that one of them is a triangle and a square, and so is the next one. And then this one just so happens to be that. So it's interesting that that's the way that it has been set up. Like each time that it's made that distance, it's followed with this much consolidation. And then, you know, each time that it's spent doing a triangle and a square has been the entirety of all of the movement until it's finished making a triangle and a square. It hasn't been able to move on. And well, let's talk about how much it has moved on average. Like when we finish number one, is it not true that we moved this much? We're nearly, I mean, we did Huh, it's interesting. I think that if we take a look at this distance right here, and I'll make it a different color. I know it's a really abstract method of analysis and it's like not really seen very much, but I'm like, what I'm trying to do right now is find as many facts about the situation as possible to gain an understanding of the next time that we see something like this, you know, or like, because this triangle is remarkably similar to this one except in reverse. And I'm like, well, is it not true that after we were done that rough time and space here, that we pulled back this much again? Or am I crazy? You know what I mean? Like it's absolutely insane how it wanted to be like that. Now, you know that we have a green zone and a red zone here, and we also have a green zone and a red zone here. It hasn't really been made clear yet, but it is true that as we were passing this level, the red zone did come to the green zone, and it was used as a level that it acknowledged. So it stepped on top of it. Whether we like it or not, it is true. And it did come back and step on top of the top node as well. So I'm like, I love to understand that it's a fact that all of these things did happen. I'm not like making it up. Like it's true that there was a triangle and there was a square, and then it led to another version of the same thing, and then we did the third. And that was when it all came to an end. So it was like this is the method the market chose to consolidate into this event, which was right here. And that's how it was before it made that event, which is absolutely incredible in my opinion. And then we can see that it's continued to use a similar method, but in reverse, because we haven't really seen this triangle. So it's really interesting. Curious about that.
Morning.
Hey. Oh, I saw that picture. Yeah, nice. They look like hamsters.
They're about as big as little hamsters when I brought them home too.
So I like having a chart where we can see that, you know, these are ranges that it decided to use in the past. We can see it kind of like spiked into one and stepped on top of it and then ran all the way to the next resistance barrier that was presented by that blue bar. And then everything kind of kicked off above it, and we could see that it's almost like the range above was used in a very similar way to the range below. We spiked into it just like this one and then stepped on top of it just like we did before. So the amount of volume, you know, it just tells me that back in the day, we used to trade here and there used to be a big node like this one inside of that area. Oh, geez, thank you. So basically, we have the ranges and the high and the low. This one here was made the exact same way as this one here, right? So it was a depiction of we used to make a sorry, hold on 2 seconds. Gotta turn down that music for a second. But the red zone and green zone is a depiction of how we used to go up and down along this area. Now, let me just scroll it to show everyone. We totally went sideways in that area. Like, look at how much sideways we went overnight. It was absolutely incredible. Just for some perspective, that was the level I said it was going to hit 10 times uh, at the close, and it hit more like 100 times. But at the end of the day, the blue bar is getting hit right now as well. So that's an incredible retracement all the way back up to that blue bar that we were looking at uh, yesterday. Blue and white line. But let me see. Hey, man. So back to what I was saying about the green and red zone though as well. The areas used to be ranges, and those ranges basically we can see the high and low of them were in there. It spiked into them and then stepped on top of them. And notice, okay, that this spike right here first happened into the range that we used to trade in, and then it stepped on top of it. And then this is the old range that we used to trade in. It spiked inside of it and then stepped on top of it and then moved it beyond, right? So we can see that that's a fact that that happened like that. And I'm just going to remove those. So at the end of the day, there's been a method to step on top of these levels. And I just wanted to show actually that, oh, whoops. Didn't mean to hit Control U. But Control U does that apparently. So now you know. You get a new tab. At the end of the day, this area that we chose to use right here for our consolidation today, like if you're just looking at today's movement, it's the same area that we've roughly spent consolidating overnight over this one and down here as well. Like we've made it very similar. Now, not the overall movement, but what I was looking at was actually the size of the node. Wait for it to pop in. This distance that we made here is very similar to the distance that we had up here and the distance that we had down here. So like that's the size of those two nodes that we were looking at, right? So those two nodes right there versus these two nodes down here, and they're the same size as our old areas. So I just think that that's really important. So this isn't a depiction of exactly how the old areas were. Now when we go over to this chart, we can see all of this was created today. And all of these areas depict those four nodes that we were just looking at and how they are going to be used throughout the day. It's interesting that that can be found there as well. In association, like it had the move first instead of second. But I'm like, yeah, okay, you know, if these areas were the areas that it decided to consolidate in this current trend, is it not true that this is how much it pulls back when it pulls back? And you know, we can see that the bulk of the volume is contained within the same rough amount of space. So if that is the case, are we currently on the fifth wave? But yeah, the Nasdaq's rallied back up to the highs. Let's go ahead and take a look at some of these old levels. The 188 200 just got hit. We can see the blue and white line is definitely getting some attention. Here at the open. We can see it's come up to hit an old B point too, a very small one. And that was throughout the big dump that it had there. I was like, well, that's, I mean, technically it is an untested B point. Unbelievable that it came back to get that. And, of course, like, what about the B points that we've left today? Like this one here, like this one here. We've got some across the highs up here, but those are the major ones. And it is true that they are untested. And it is a fact that in order to test them, we will have to break this trend. That becomes a very intriguing trend, one that we cannot miss uh, or overlook, because things can change on the other side of that trend. After all, if we take out what's holding us up, don't be surprised if we fall down, right? That's the idea of that trend right there. It's the support that in the event that we take it out, it's true that we'll have some other trends, but they're so far away that like this one here. I want to talk about the movement that we make when things get pretty serious. And it's like this one here. What is the result of this? Like, do you see what happens to the angle of the trend? It's like, you know, think about the people that first started off. They were worried about this trend breaking, and it broke and retested. Like, I'll make it solid. So that red line right there, it broke, retested, and continued down in a three-wave move. So that B point's just been cleared right there as well. The red yellow line broke. At the end of the day, like I was explaining here, this trend was too steep to run up on. At the end of the day, this is one of the best ways that you can readjust a trend so that you can blast off and have all the time in the world before the trend actually breaks. Like, think about this big dump right here. It didn't even get us anywhere close to this next red yellow line, did it? It really didn't. I mean, at the end of the day, this line did break, sure. And that's great, but at the end of the day, does it really pose a threat to this one? Not really. It just hit the B point. So it did hit two VWAP bands as well up there too, which they're not meant to, be overlooked either. They're really important VWAPs that, we essentially launched off of today as well, and we respected them early in the day, and I like that. But they're up there, and what we've done with this trend, as much as it looks like it's come off really heavily, it's merely readjusted to be a new support. And until that trend breaks, we can't get anywhere close to this red yellow one. That's just a fact of the matter. And even if it does break, is it that much of a threat? How much energy do we have to exert from all the way back here to even get involved with that trend? Now, time can work in favor of getting close to that trend. Like, if we went sideways, not to say we're going to, but if we did, then it would become a matter of time before we would break that trend. And we've seen, blue lines overnight act like that, like the one that we're just at right now. It came back and sniped it. And we've been seeing that with blue and white lines all over the place. Now, every single one of these blue and white lines that's worked like that has been part of a range. And it's true that this one is too. I just haven't made that clear. But between these two lines, there is a range. Hmm. You know what? That's really interesting to me. We're gonna look at something here. Okay. So you see how on the bottom of this range, it dumped out of it, but it hit a 261. And that's intriguing to me. So we know that this bar right here not only doubled, but it went, a little bit past it. It went 61% past it. I guess you could say a little bit more than that, but still, almost tripled, but not quite. Because tripling would be the 300. just for some perspective. So if you see how that works, it tells us the distance that it got away from this original range. Now this original range is quite interesting to me because it has levels inside of it, and you can see whether or not the market respects them. And this is a line that I typically make gold because it's representative of the 61 and the halfway point. And we can see how the market's treated it so far today. Typically I like to make these ranges blue as well, but yeah, like that. So what I've noticed with these ranges is that they love to be particularly even. Like having a 261 on the other side might seem a little ridiculous, but it is actually something that I'm interested in. Like let me show you one thing. No, it's supposed to be here. So this move here, like we went under this move by 300%, and we went above this move by 300%. So on both sides of that blue bar, and this is on the hourly, it managed to stretch out to be even above all, beyond all odds you would think to be able to produce something like that. It's ridiculous. It managed to take from this blue bar, like it's the middle of the area. Sorry, that was terrible. Like this, and then did that much on the other side before finding the need to come back. That much. That's heavy duty, in my opinion. Because what separates them is like a move that's centralized in the middle. And it came back to hit that point. So it's almost like it tried to do a big spike on one side and then a little spike on the other side. And that's what it was trying to do. Something we're all familiar with. And I mean, like, that's just one way for it to make that pattern, you know? And it managed to do that here. So then we go into the short term and we find the same things happening as we do on the long term. Contrary to popular belief, many people will think it's too high to be able to do what it's going to do, but it will show them that, like 2015, it could be high every day and go higher, and on bearish patterns too, which is crazy, you would think. But I remember when I first started looking at technical analysis, um, I noticed that that this was a bearish pattern, a rising wedge, and it would come down, right? But the market moved up every single day. Was like this pattern formed almost, and it happened every day. And it was like under no circumstances was it out of the bearish pattern. And it's very similar to what we've been doing lately, where we have a consolidation here at the beginning of each run. And it's not as crisp as a rising wedge every time, unfortunately, but you know, it's something. But something every time and something else every time now, which is interesting. But I'm thinking about what about putting it on the other side? Like we've done a 261 on this side. It seems quite drastic, but we are already above it. And it seems difficult to stay above it, but this is a day where we can see there's heavy movement up into the open because of the reports. And I mean, like, okay, this blue bar, it stays forever. So we'll just extend that so that it doesn't look like it's out of the picture. So you can see that that was like a big ploy on trying to get people to chase a short trade early in the day. And the trend break effectively is using the space that it has to be able to advance beyond the highs. Now I'm curious to see what that looks like, beyond this point. Like what are we in for here? Like what are we already at? So what we're looking at is this 261 for things to be even. And then the blue bar could be in danger of hitting. We will see that blue bar again. And I'm like, the more space that we buy with that blue bar, more likely it is that we coast into it and then it causes the break when we get to it. And you can count on that kind of analysis to, I think it's going to be more predominant in this area because you can count on the fact that most people aren't doing it. It's too much work. So it's very likely that we will continue to see it work until people obstruct it, which isn't likely to be soon because it will take time for them to figure it out, which I think we're not the only ones counting on that, but the people that are instigating the moves. The 261 is on the other side of the spectrum. It would make things even if we got to it. I'm looking for that. That's basically the deal with that. Then back to the blue bar. Then back to the blue bar is going to be a grave consideration for the break of the current trend. First step is getting to it. I think it will take patience. Oh yeah, I forgot these lines come from way back. Okay. Okay. Oh, another thing. This is a blue line right here. Did we come back to it? Nope. So we're going to. Short-term version. Any stops dragged above that level will cost the position. Unfortunately, that's the reality of it. Anything that obstructs it from getting back to that is likely to get taken out. So we're at a 188.200 right now, and I can see that it's feeling it. Sure. No volume has been placed, no more volume has been placed at any level since we've left this level, since we've left the blue bar. We haven't been able to spend more time or put more volume at any other spot since we've left that blue bar. I'll give it that. And it's true that when we come back to this point, um, it could feel it as well. Could be a healthy thing to touch the blue and white line, to be honest. Because doing so doesn't really get us too close to the yellow line. And I'm like, how much have we pulled back when we pull back? Is it similar to what we've done like here or like here? What I like about when we do that much pullback, what has it always led to? It's always led to a continuation. And the continuation has always been how much it's done before. Like even here, that much movement to the upside. Suspicious that that's like roughly the size of the breakout. And then from that triangle, this is the same breakout. Interesting. So the distance that we've been leaving these consolidations is very clear. You know, when we do this much pullback, we're getting this much movement. Well, it is the case that with this much pullback and consolidation, this much movement is in direct association with that much consolidation. That before and after, every time it's managed to do that much consolidation, it has produced those moves on both sides. This one was a little interesting because it produced the same kind of movement on the underside, but not exactly in the same way. The 261 would be pushing above and beyond uh, One thing that I've noticed is that with many 5-wave moves that have been failing, the very least we've been giving them the 4th wave. And this might, jog the memory of some that were interested in it yesterday. Like this. We do it again and stack it on top, right? So at the very least, it's wise to allow a pullback to the 4th wave of any 5-wave move in this sequence. Like, look at this one here, for instance. Is it like a sneak peek on what was to happen in the future? Like, it was like 1, 2, 3, 4, 5, just back to the 4th, and that's it. And then even here, it's like, oh, one red candle here, and another one here, and it basically jabbed a bit past the 4th and then continued. And then here we are in this short-term movement here. We've just come back to this 4th, but I do notice that we've had 2 major pullbacks in this sequence here, and they're separated by 3 upwards moves. And that has had no effect so far. So it's kind of interesting. It's like before, at least it was interested in coming back to the 4th wave. This time, the bigger one, the one that would seemingly provide more value, is not doing so. Curious to see if we're just allowing people to short this and then spike to get to the 261 and then come back down. The blue and white line is something that can change things, as we know. And it's not managing to get back down to it that's really the shocker here, is it? So it's not really that big of a distance to get back down to it. So I'm like, well, usually when it's not a crazy thing to get back to the blue and white line, getting to the blue and white line becomes the crazy thing. Like, think about this. When we went up beyond the blue and white line, it went sideways all night again. And then through the blue and white line went down. And then, ironically, it came all the way back and through again, which is like, wow. To what we've done right now, just for some perspective, we've taken the blue bar and doubled it. That's the fact. To get to the 200 is to double the inside of this blue bar. So we can see now we're at the blue and white line. We're about to hit it. What we've managed to do at this high is create a new trend, one that I call an audacity line, because it has the audacity to break over the big bad trend line that everybody wants to break. So let's see. Of course, no stops are safe above the blue bar. I am curious to see how it treats everyone above it. Ultimately, uh, this is an area that has been known to be wicks and spikes, but even ones. That's why suggestive of the 261 being the high, because that was the low. So we have to beware of that kind of happening in the future. It's true that on the short term, small B points have been made and they're basically trying to get hit now. I wonder if that blue and white line is going to be used as a trajectory line, stepping on top of it and hitting it. It gives the vibe that it's stretched beyond it enough to be able to be interested in hitting it multiple times. So beware of the line I call the audacity line too, and we shall see how it works in a moment, because at the end of the day, it's a line that people would least expect to have an impact. Because of the obvious steepness of this major support line, it depicts that there's weakness, but you know, when it has the audacity to break a line like that, it really puts everyone in their place. The original batch of aggressive short traders are in trouble right now, basically. And it's not a typical level that, it's not like it's something that wouldn't typically work. Like doubling the range is usually enough to come back. But if you don't notice that we've made the 261 on the other side, you would notice that it's not this distance that it's made out of the bottom. It's more. It's this distance all the way to the bottom here. Yeah. The idea that we can be in a small short-term triangle is also a fine one. Could be treated as a triangle, snapping around the area that makes the tip, making it uncomfortable for everyone that's exposed in the area. Of course, it's like, how do they treat the people of the first node of the day here? First node of this high. That's what I'm curious. It's not particularly even yet. And that I notice, I'm just like, okay, we don't have equality around this triangle. It's kind of lopsided to the bottom. It's true that there is an untested B point close by, but it involves getting through the blue bar. The blue bar has been used once before. Now it's been weakened a little bit because it was used. So far we've snapped out of the bottom of the triangle a tiny bit. Basically, when I put a B point on there like that, it means it's very dangerous to put any stops above it, but we know it's very dangerous to put any stops above this entire blue bar. It's like an equilibrium. Now it's true that this B point has been readjusted to that low. Can't help but notice that there's some up here as well. Let's take a look at that. They're from a ways away. Still untested as well. Yeah, they go way back, okay. The blue bar getting its test. This line becomes more like a red-yellow one, because it means that it is the final line that marks the high. No other line can really depict the downtrend than that one. This is the medium bar of the range. Roughly in the middle of the entire movement sequence here. Looks like that is the middle. Past it. The edge of the blue bar. It's an old POC. I'm interested in seeing where the 61 is in this on this entire move. We're at the 50 right now. 50 has been common today. Curious about a test of the blue bar from the underside. How it responds to it. How it perhaps steps on it in an interest to get back to the short-term low that it just passed. The candle begins off of the blue bar in an attempt to try and grab that B point. Volatility relatively high off of that move. keep an eye on the fact that that B point right there is at the high of this node. An area that it used to trade in today for a brief time. Everything that we've managed to do on the top and bottom of this it's not quite a spike on the other side, but that move is certainly there. And this is where it originated from, like the baseline of the spike. This is a blue line that basically was a pre-market test that never was tested during market hours. And it kind of missed it when it first got to it as well. We've closed much of the gap with the bottom red-yellow line. And of course, the consolidation that we used to have here is represented by the green and red overnight, sideways, down, and then up, which has undeniably created that red-yellow line. This morning, we noticed that inside of the original pattern, it was a series of 50% pullbacks. So like this movement right here was a 50% pullback, and then this movement right here was also a 50% pullback. And then this movement right here is also a 50% pullback. Just to put that out there. And ironically, did you know that this is that level that I said it would return back to 10 times before the close yesterday, and it just returned to it again. Ironically, this is the largest gyration that it has ever made beyond that level, and from that level, I wonder if things have been made even. You know, as it likes to make things even, you know, it went this much past it. For what it made it past it was wicks and spikes. I do think we'll rival that high again ultimately, though. It is the case that we're inside of a node that has been used as a consolidation area in the past. If we take a look at the other chart from today, these are the ranges that I've basically put in from today and how it's amounted to moving around the nodes that it set up in the pre-market session. We can see that, you know, use the green zone again, back to the red zone. And that's been the case so far. The POC is down at the bottom still, but it doesn't look like that's going to be the case for long. Like we saw yesterday, there was many times where we made two nodes like this, and this one would steal the POC. And I just want to point out as well that everyone got a sneak peek of exactly what it's like to have two nodes, right? And to be stuck in a range, right? So two nodes like that, stuck in a range. Well, remember now that we have two nodes, and this is the range. One could say that if these are to be expanded on, um, they could work in a very similar way to the other times that we've had two nodes. And it's funny to me to see that on the first time that we did this, we pulled back to a green zone. Look at the fib. Oh. So from this low to this high, it pulled back 50%. Now, from that low to this high, it pulled back 50%. What's up with that? Suspiciously particular. But that has been the way things have been since the beginning of this trend. And should we allow it to continue to be that way is the question. Because is it not true that when we made the first pullback, like ever, here, what did it show us it was? It pulled back from this low to this high to this point, which was the 50. So 3 times done that now. We should start looking for that to happen in reverse. What is the 50 look like from this low to this high? It would look like this point. I'm just curious to see how it affects it when it does hit it in reverse. What if it doesn't care about the 50 on the way up? You know, does that matter? Yeah, it does. It means the things are seriously unfair and they're not even. You know, like if we make it to the 61 to the upside, that means that we're moving up by this much every time we make this pattern. So let's see what the 50's got here, because undeniably this will be the first time that we hold it if it does hold. And what is the implications to breaking the 50? You know, that could mean everything we see coming to an end. But hey, why is it above it? Because it's not doing what it was doing in reverse clearly, or it would have reversed at the 50, right? Or am I crazy? Because at the end of the day, I've just got proof that it only likes to hit 50s on the bottom and then come up off them. Well, we've just hit a 50 on the top and it didn't even care about it. And that's a fact. So I'm like, okay, what do we do with that information? How do we use it? You know, at the end of the day, does it have to reverse off of a 50? In when we're coming down, not necessarily, but it is true that now we have managed to make it to the 61, a more common reversal level anyways. Breaking through that would be interesting. Now, is it not true that every other time that we have made a 50, it's led to a high in some which way, shape, or form? Curious to see if this one does too, because it will be the biggest one yet. So every other time we've managed to hold a 50, it's went to the high. Interesting. Since the beginning of this trend, at least. You could say that that is one of the things that it does the best. Notice as well that when it advanced last, this is the amount of distance that it put between the pullbacks. Suspiciously close in time. Why so similar? Hmm. Undeniably, the 61 did have more of an impact than the 50, and it brought it back to the 50 itself, right in the middle of the dump. And in this environment, in the event that we come back to the 38, it will be very much like a low with a lower low and a higher low. And it will have a high with a higher high and a lower high. Very similar to making a head and shoulders to an inverse head and shoulders. That's more like this. Now, the funny thing about that pattern, the first thing to show is a head and shoulders. The last thing to show is an inverse. But it's true that all of the confinement areas exist. Like this is the left shoulder, this is the head, this is the right shoulder, and again, this is the left for the inverse. This is the head, this is the right shoulder. And that's a bullish pattern. And you know, this one, which is a bearish pattern, debatably it worked. You know, it got it down to here. Got it into the next pattern. I mean, like worked, hardly. But it's true that it's great at making triangles when it does that. So, like if I I was gonna Like if I show you like this, it's got the same thing in reverse, give or take. Or no. Does it not take the same time? Does it not make the same moves? And it's like, well, the same characteristics could be seen in reverse. And like undeniably, I can draw a trend here and a trend here. And make it into a triangle, which I think takes precedence above all. Because until it's done triangulating, we can expect it to stay within the confines of these two barriers, and they're the most important barriers that can change things. Because if they don't, I mean, we have to wait for the break of them, because until they break, we're confined within this area as the moves become smaller and smaller until it's done. Another thing that does come to mind is a head and shoulders with two highs into three lows. You know, three lows and two highs. It puts a lot of stress on this line and its ability to double the range. So I put a little bit more weight on this line. Doesn't matter if it's not a line that has to break first, but it has to break last. Basically, the spike out of the bottom of the triangle is subject to potentially doubling out of the top. See where we line up with these other lines from the morning. That move just so happened to be another one to the blue and white line, the one that, you know, we've been talking about since the morning. I wonder if we're going to see more of the medium bar here, the line that a lot of the moves have began and ended off of since we've been involved with the blue bar. A line that marks the equilibrium typically. Like the middle point of the range. And today's range is on an angle, and it comes from yesterday. But that's fine. We can still see that it spends time using other levels from previous days. Like, you know, where we are currently putting the bulk of the volume is actually in between areas that we didn't usually trade, which is kind of interesting. You can see that the move that we're making right now is in fact up to that medium point that we were just talking about, the gold bar. The other chart does a really good job at showing us the triangle, the idea that we're triangulating and getting smaller moves. You can see that's happening here. We've made one gyration and then another, and it's nearly half the size. So that'll come to an end at the end of the triangle, of course. We can expect larger moves. So we've returned back to the triangle. We can see we've used one of the old ranges from this morning. It doesn't necessarily have to be used the same way, but the blue line as well is very... Oh no, that's not the same blue line I'm thinking of. The entire movement sequence that we've had now is going to be approaching the 61 controversial level that technically we came from a 61. And it's like this high was a 61, and now we approach the 61. So the last major response that we had at the high up here was a 61. Now we approach the same level on the other side of the triangle. We've returned back to the bottom of the triangle. The last line I want to see break will be the purple and yellow line, likely overlapping all of the movement that we see within the triangle when it does break. This is the node that marks the most centralized area of the day, being the 50% retracement of the entire move here and the entire middle sequence of this node here. So it's true that, the area that I said it was going to get to 10 times yesterday is right in the middle of this node here. And what we've done is went sideways, down, and then up and returned back to the middle. Like that's been the series of movements that we've managed to produce out of today so far. Approaching the purple and yellow line and the end of the triangle, of course, as well. Taking a look at the spectrum from yesterday, we've been able to grow this node to become more predominant than the one below. I did mention that yesterday we saw a lot of that where the lower node was the POC and then all of a sudden the upper one, which is, suspiciously particular in size in every single which way, shape, and form, it becomes the POC at the top. Just like we can see down below, it's like, all right, it'll make a POC at the bottom. This is the movement that happened here first. Like we know none of that happened before getting to here. And so this was the first to form, the bottom node. And then it went to the top node and really put like twice as much volume as it ever had down below here. So we can see that kind of relationship is common with the two nodes, at least in the short term. And the upper node here now, overall it does have more volume. But it's very much like we're in the equilibrium of an S wave where things have been equal on the bottom and things have moved up to be equal on the top. And now we're in the middle of the two portions, getting ready to leave the middle of the two portions. And I think rival the highs again. What I find intriguing about this is that we didn't manage to get to this B point down here. It is true that this is a B point that doesn't it's never been tested. The only one really that hasn't been tested that's that significant. Which is intriguing because it must get past the 61 to hit it. And if it makes new highs, that's only becoming more of an issue. It can never lower the 61, it can only raise it, which is an interesting fact. It's like it's kind of screwed itself by making that the move on the high. But if it did, no, even if I considered this movement to begin at the high of that node, still doesn't get it. The last trend to break looking like it's going to be the other side of the triangle. And it's not going to be much to make twice the amount of movement out of the other side, but if this is what it chooses, this is what it chooses. And when it's done, it can move on to the next thing. But until it's done, we have to let it finish. We know the triangle has to end unless, it gets, what? It spends how much more time in there? 3 more minutes or something? I do admit that yesterday we spent a lot of time getting right to the tip of the triangles. If it chooses to spend the 3 minutes, not the end of the world. And it's like, whatever it doesn't do in the triangle, it can spend the 3 minutes trying to come back to it as well. It's not something that necessarily has to happen in this case, but something that I would hate for it to cost you your position. If you drag your stop outside of the top of this triangle, it'll also be out of the top of this red zone. And I mean, we love coming back to this range, so I wouldn't obstruct it from happening. It's like once we've built support above it and then moved beyond it, it becomes much more safe to drag short-term stops above the ranges. Doesn't have to linger, but retesting the triangle is kind of important so we don't have to do it later. So I'm like, okay, it's best one of those things you want to like get it over with. At least that's how over the course of the triangles I've seen, it would seem like that's the case. You can see it's trying to get that to be the case now. Not really much of an increase in volatility since the end of the triangle as we can see, but what's the ATR looking like? 15? Pretty heavy duty actually. We know that in a couple minutes it won't have a triangle to return back to. Well, at least it won't be this one. If there is one, it will be a different one. But as far as first trade of the day material goes, like if you haven't made one, this area right here is probably the worst place to decide to make one, I would say, because it's like it's growing the area that has been the middle, and it's got the heaviest amount of people trading at it. And I mean, like, you will be one of those people if you decide to get into that area. I mean, as strange as that sounds, it's true, but it's not. It doesn't mean we're gonna. It doesn't mean we're not gonna leave it, sure. But does it mean that, let's say we leave it, we come back to it again 4 or 5 times? Could we? And it's just like that's uncomfortable, you know. Could we find a better place to position ourselves from so that it doesn't have to come back to us a million times before actually leaving, you know? And I'm like, well, for the peace of mind, it's typically best to understand this place is great for profit taking, but not great for entering, you know. And what it has dished out since it's been here has been a series of movements that have been less and less until we've basically amounted to this, where it can't really move less than, you know, this. I mean, what does it try to do? This move and then literally half of that move as well. I mean, what we're kind of stuck here going to the middle of this one. It's at the pinnacle of being able to go smaller, and it can't. You know, like it's like expansion is the next thing to expect, like because it can't clearly contract anymore into the tip of that triangle. It's definitely not on the table. So I know that we've been waiting for it to increase in volatility. When it does, it will likely provide B points on that volatility. It'll provide data as to how fast it's moving, how much it's moving, where it moves to. Is it interested in this node? I can tell you that that node is an interesting one because of the fact that it matches up with the controversial fibs of the day. The 61 and the 50, the two levels that ironically have been the best at doing their job so far. And it's not even just today, it's just in this trend. Since we've went up from that low, the 60 and the 51, sorry, the 61 and the 50, sorry, are the most attractive levels. These two right here, that one and that one. You know, they've been responsible for every single step that we've ever made in this sequence. So I'm like, all right. Looks like we can be done with this triangle now. On point. No pun intended, but yeah. That's a funny way to remember it, actually. You know, triangles are on point about finishing the consolidation because they finish on the point. You know, that's the joke, I guess you could say. Shitty financial joke, but you know, it is true though. Like at least in this case, that the volatility increased on the end of the triangle, and it indeed is interested in this node above. Um, that's the case. Feels it, and it's interested in these highs that it's just made down below as well. We mustn't prevent it from hitting levels like that. Not that they're attractive to go for necessarily, but it's uh, it's common to see short-term gyrations fulfill levels like that. And if we wanted to spend some time at that at that B point, it would make sense. Interesting that if I place a VWAP there, it does plot one right here. Could we be interested in hitting the high? Well, I can't help but notice that there's another node there. And I do like the idea of getting to it on a side note. But how it wants to do that, it shouldn't really matter how it wants to do that. If it wants to make a little bit of a consolidation in the middle, if it wants to hit this B point, they're all things that should be allowed by anyone that caught exposure to the purple and yellow line. Because that was the last one to break, and it did double up more than twice the amount of movement that it did out of the bottom of the triangle. And if you go back, that's exactly what I said it would do. And to this point, it should be made profitable. It's safe to continue holding. No stop should be dragged above the triangle or the B point especially. Allowing it to chop at the VWAP is okay, and I mean it's pretty straightforward. It's not the best movement in the world. I don't think that I don't think it's nothing to write home about, but it is going to be changing on the near future because we're not in that triangle anymore. What have we done since? A three-wave move, one that's exactly the same on both sides. I mean, like, what? Can we do that again? Would be nice, but the VWAP is an anti-volatility VWAP capable of making us go sideways, which, I mean, we have been doing for the past few minutes. On the moment we hit that B point, it will be interested in testing the underside of the VWAP as well. You can see the inclination it already has to do that. So not an immediate test, but that's fine. A new trend's presented.
Good morning, everybody.
Morning.
Time to get the coffee rolling.
Oh yeah. Now I just want to point out one more thing. It totally had like this big, kind of like a fatter triangle at the beginning, right? And then it consolidated and then it did a skinny one after, right? Well, just remember that that's been the way it's happened all day. Like, is it not true that at the beginning of the day, it started with this fatter triangle and then it did a skinny one, and that's how it ended up being in the middle. Like it was larger here, smaller here, but it all resorted back into the middle. Now, let me show you another example. So the entire day's movement, is it not true that this is like a large movement that comes right back to the middle? Like all of this movement right here. And did we not make a smaller version on the other side? Like it totally did that. Whoops. It totally did that. So very similar to what we've been doing all day. A smaller version comes after the bigger one. And I mean, that's similar to how we've been seeing patterns in general over the course of the past week or two. The larger version happens first, the second version happens second, and it's dangerous to make these kind of moves. If you make this kind of movement like that, it could be on the brink of a breakout. Very interesting to see how that formulates. If they do anything against that move, I'll tell you one thing. Today was representative of being able to make that kind of movement, 250% retracements. It like skyrocketed after, right? Could it be a smaller version of that? Well, we'll get to see in a moment. Curious myself. Now, to do a 50% retracement of the entire move could be on the table first. No, it did a 61. Okay, that's interesting. A 50 would be the POC. The 61 would be just below it. So we basically came up to test that VWAP from the underside. That's been the mission since we've been below it. We are likely to see it again, I think. The VWAP is easily changed though. That's one thing. So it's roughly tap that red zone and where that POC used to be. It should still be there. It's strange. There we are. Also another return to the triangle. It's made another trend that's like kind of eager to break. Centralized from the middle. Must keep in mind that this has been the point that has been the most problematic for anyone that has been positioned from it. Like, I don't say this, you know, it's very, very rough on the people that have been exposed from this point here. This red line is never somewhere where you truly want to be exposed from, but exposed to. So, targeting that level is one thing, but like trading from that level is another. Because it doesn't matter if you're long or short. Um, it's been very problematic for everyone that's been part of that level. It's crossed over it more times than it's crossed over any other level. So I mean, like that's hardly a good thing for anyone exposed from it. Like I said, it doesn't matter if you're long, you've had to have it come back. How many times does it come back? It doesn't matter if you're short, how many times does it come back? Like if it's been a short, it's been very, very tough. Anybody that's shorted in that level has been very, very, very uncomfortable if they've had to deal with this huge move on top as well, right? So if they survive that move, they've had to deal with more uncomfortability. Nothing's really worked out for them well off that level. And that's one thing that I can see there. Anything that the Bulls have ever done off that level's come right back to it as well. So it's been tough on them as well. And at no time has it ever been the best price, and no time will it ever be the best price. So is it worth fighting for? No. Not in my opinion, no. And are we going to be surprised if it treats people badly that are exposed from there in the future? Not really. Like, it is only the tip of the triangle and the middle of many moves.
It's so funny you're mentioning this, John, because right before I jumped back in here,
Hmm.
a friend that's interested in trading was like, "All right, Oni, let's you trade, make some money." I'm like, I don't want to trade right here, man. This is exactly what you're saying, basically. And I explained that to him, but yeah, it's so funny that yeah, you're 100% right. This is not where you'd want to get in at.
Hmm.
The extreme up there, that would be a great spot for a short if you got a short there.
Hmm.
Seems
Hmm.
like a great opportunity. Yeah. But right now, no, God no.
Yep.
You can
And
also see it in the RSI too, hey?
oh, let's
The
take a look.
RSI lines are in the middle.
1 minute.
Yeah.
Oh yeah, like they're like if these are in indicative of what's going to happen because they're indicators, they're not doing a very good job at showing us that anything special is going to happen because they're right in the middle. That's in other words what you're saying.
John, I actually don't know what either of those are or mean. Like the two things on the bottom here, I actually don't know what either of those are.
Oh, so there's strength and momentum indicators. So basically, what we like to do is measure how they look against what the price is doing. Because at the end of the day, one of the most important things that we can see here, I'll go to. Actually, this is the cleaner chart. But if we look at this at the very very bottom extremes and like let's talk about inside of a range for instance because it is used differently outside of a range and inside of a range, but when we're inside of a range and it clearly has a red zone and a green zone, or it's basically confined to an area, and you can see like in this environment here that giant node is like where the bulk of the trading happens, and we could say that when it's at the high it's at this red zone, and when it's at the low it's at this green zone. And let's just take a look at how the momentum works while it's inside of this range. So for instance, when we first started off that range, you can see that it made a low with a lower low right there. And it's a fact that it made an even lower low. Like it was down by 4 degrees at that bottom. And if you look at that same time, it's actually like climbing on like here you can see it very clearly. It's like wow, like that's obviously going up, right? So what that means is it puts a hell of a lot of stress on the downtrend. And you can see if it's in the green zone of a range and it's got that going for it, there's a good chance it wants to break the trend and at least try to get to the other side of the range. Sometimes it won't make it all the way. It can be obstructed by some other level like a 61, like this time. Like you can see it was a 61 that held it back right there. So it's like things like that, if it runs really hard and runs into them, they can cause problems, sure. But at the end of the day, the name of the game with this range has been to go from back and forth. And if you find that there's reasons for it to to make a move, like let's look at this one for instance here. You can see that it made a high with the higher high, and it clearly made, it wasn't making a high with a higher high here, and if anything it was flat here, which is not making an advancement. And what that would do is it would put a hell of a lot of stress on this support line. So you can see that there is a support line. It's making new high. It's making new highs, and this is not. So this is the indicator. It's supposed to indicate what the market's going to do. I mean, if this isn't going up like the market, causes serious problems, right? So at the end of the day, we can see that across the board, even when it's going flat down at the bottom like that, and you can see like it might have even had a slight decline to it. Yeah, it was down by 1 degree and it was slightly moving down. And throughout that same time frame where we could see that those lows were there, we're definitely making some progress across the board while it was doing that, which in turn put a lot of stress on the overall trend, and it broke at the point that it met it. So it was really
As long as we're going sideways, the trend that we have will have to break. There's no way about it.
yeah, exactly. Yeah, that's a good way to look at it. Yep. Yep. It's interesting, and there's other ways you can look at it, but that is one way that you would call it a bullish or a bearish divergence. It's a divergence when this is doing one thing and the price is doing another. And like let's take a look at what it's doing right now. Like for instance, we can see that it's got 3 consecutive lows in this environment right here. It's been really tough on everyone that wants to be in for that trend break, I can see. But no, like, I mean, what are they doing trading in the middle here? This is how it's treated them. No wonder, it's like, it's literally snapping around. And I'm like, well, there's been clear times to go long before, but obviously, it's you have to start somewhere in some cases, and this place is a rough place to start, I would say, but it will come to an end and offer a place that might be more of an extreme to be attracted to. Like, I think the name of the game is to try and find a level that's at the extreme that will hold for a prolonged period of time and give you the flexibility to be able to manage it while you're waiting for it to make you more money. And it's very like hands off. You're waiting for a long-term target that's far away, and those situations do arise, but I don't get to decide when, right? So we could we
You're saying this with the idea that you have something going long as well.
well, yeah, like the idea is if you're not in anything, you want to try and get that one core position. And I mean, if the market, if the core position has been long for everyone for so long, and now we're here up at all-time high, the next core position for people that are in nothing is likely going to be when this trend breaks. So the patience is key. Like it might take like chopping and chopping like this to get the reversal. Just like on the daily highs, it might take chopping and chopping to get the reversal. But it means that on the short term, you can take extra value, and when you capture a high you might be interested in letting some run just because you have exposure to maybe that next big B point that hasn't played out.
Third profit, right?
Yeah, exactly. As long as you've insured some profit and you've made it safe to continue holding, you start with holding just that little bit. If it works out really well, next time you get that same situation, you can hold more. And it's like that's like a if you had to write a report about how your actions were sensible, like that would be like one way to go about. Like I can plan for this to be a way that's acceptable for me to look at in the future, and for me to be able to explain my actions to myself, because that's the way that you know you want to be able to do it. And yeah. But again, with this triangle right here, we can see it's coming to an end. The volatility has increased around the tip of it. And anybody that's essentially went long or short from that red line has been put under a lot of pressure yet again, because whatever profit they did have, doesn't matter if they were long or short, it's come back to zero right now. And it's making them wait. It's making them sweat buckets. It's making them exert energy on this this range, which means, next time they get the chance, they'll probably take whatever profit they have and run, right? So that's the idea. They won't be here for the next most attractive area, which we can see is it's almost like you can call this consolidation the divider. Like I called it the other day. I was like, it will separate the people from the professionals, and it does this a lot because I noticed that it's almost like they can move it without the obstruction of everyone else at the end of the day, and I've seen that been the case many times. But right now, I can see that they've definitely started the day by being here, and all of the big players are definitely here and understanding that today's a big day with big moves and a lot of precision. But right now, we were in the middle of all of that. And then I want to talk about how many times do we leave the middle? It's not. I don't want to get everyone's hopes down when you get to the middle that it's never going to leave, because it always does. Do you know, like every time that we've ever been at the middle, it's always left, or else we would still be at the spot that we didn't leave before. One of the past 1,000 consolidations would have kept us there if they didn't all end. One of them, we would still be there, but no, all of them ended. So I'm like, it's incredible. The average human being could think that it's going to take forever, when it really, the irony is that none of them have taken forever, or we would still be in one of them. So it's true that they all have ended to get to this one, and this one ironically looks like it's ending. And I say it looks like it's ending because it doesn't have any more tip to go to, and it's making bigger moves than it was making when it was around the tip. So those are two things that you could say it's getting more comfortable with being away from where it was. One thing I want to point out, I talked about it earlier, was head and shoulders with 2 highs into 3 lows. And it's been something that I've noticed has been an effective way to make head and shoulders patterns fail. So I'm very, very, very intrigued about that. It would put a lot of stress on this line, which I'm very intrigued about. As time will bring us to that line. Mm-hmm.
Okay, good.
You good?
Just had some mic problems before, so
Technical difficulties here.
No worries.
Yeah,
Don't worry about.
that's what it is. Yeah.
Actually, I'll leave that line in there because it was a terrible trend break. But as of now, the people of the head and shoulders think it's working. And it's ironic because it's at a controversial level close to a B point that otherwise had no reason not to hit. But the red yellow line looks like it's going to be something that we're going to have to deal with in the near future. Of course, there is some space to getting to it, but that space could be easily eaten up after we clear the B point. And the thing that I am interested in here as well is, like, we did go sideways like this, right? And out of the top, we made this movement. Is it true that if we make that movement out of the bottom, it becomes a consolidation that has a spike out of the top and bottom? And that is a bullish pattern, ironically. Like, under no circumstances can you draw an uptrend on this. It starts from the high and goes down always. And don't be surprised if it doubles. That's all I have to say about that and about this spot. So it's like literally a price target of a bearish pattern that failed in the past. Because think about what fib did it reverse off of to get back to this level. Like it went into like what, the 423? 423% away from the original range. That means it went over 4 times the original range away. Like almost twice as far as the 261. Like what this is ridiculous. So we've done, we don't usually see that. You know, we don't usually see them be able to get that far away without coming back. Usually they do. That's why the intriguing thing happens. So this 61 is also getting treated really badly as well. The B point's now 100% hit, and we've got ones above to consider. Like all of these ones here, they have been hit on the short term, but they're nothing too crazy. And they don't necessarily have to play out off of any kind of respectable fib either. It can be a short term one. Like I can see we're running into where we had our original range in the morning. Testing the 61 from the underside is usually something of interest on the short term as well. I'm curious to see if they can pull that off. They did kind of test it on the underside when they first broke it, but a more predominant one because it is a node there as well. Curious about that. Would be very close to the B points as well. Curious about where the B point, or sorry, the VWAPs are from this old range. Pretty high. The head and shoulders that have been able to produce the head out of the neckline, I can't help but think of when we do a head and shoulders into an inverse head and shoulders, and how it makes a lot of moves through the middle, 8 in fact, through this middle point. And that middle point would be this spot right here. If we were to do that, I mean, of course it's done a little bit more in that area than it typically would, right? But would it act as the same way becomes the question. Yeah, sure, it's one big triangle by the end of it all, but it really puts a lot of emphasis on this point right here and whether or not things want to be equal around it. Kind of like how in this sequence over here, um, what spiked out of the bottom is very similar to what spiked out of the top, except it happened in a different way. But everything reverted back to that middle area, and it essentially became the equilibrium before things ended. And by as a result of all of it, it was one big triangle. And that, I guess it's not the same. Huh. Now, when I see that though, I know it's not the same, but this distance right here is suspiciously particular to the distance we made out of the bottom. I'm just going to put that out there. But those are some, like, just some interesting distances that we've used in the past that could be important to how we make things move in the future. Not exactly the same kind of movements that we were seeing yesterday though, but they are very much like this. Very much like a spike out of the bottom, a consolidation, and a spike out of the top. And what's strange about that is this is like getting 3 portions. Sometimes this one can be larger. Like today, this spike out of the bottom, the first spike has always been larger than the second. Like the baseline that it takes has always been larger than the baseline that it takes. Oh, maybe it's not that small, but the baseline that it takes the other side of the spectrum. It's smaller. I've noticed that. Today, that's been the case. Like even when I see this outwards one here, I'm like, what's up with this big one at the beginning? And then this small one here, right? You can see it's slightly smaller, like quicker in every regard to make it back to the point that it started. And then you can see on the bigger picture here, this whole movement right here is a bigger version. And it got back to the point that it started. Took long. This one, how long did it take? It was like nothing. Came right back to the point that it started. So that's interesting to me. Even on the short term now, when I see that, I'm like, well, look at this larger one that we had here. And this one came back to the point that it started way quicker. Like way quicker. So doesn't mean that it's not smaller, but it is true that it was quicker. And I mean, that's one thing that we can continue to look for so long as we're moving with these characteristics. Oh, sorry. That one's not hit yet. Also, I cannot believe how much the blue lines, the blue dash lines that I've put on there, sorry, the ones that I make blue and white in particular, how much they have caused volatility to begin. Like it's almost like the starting line, all right? It's insane how much that's been the case lately. So all of the B points have been hit as far as I'm concerned back to the low of that original node. And I'm like, well, talk about one larger movement here. Talk about this larger movement here. Is this the one that's compensating, or what would you call it? It's correlated with the ones above because it's very small, like really small, like way disproportionate, way more like disproportionate than the other ones. Like if you think about how wide this one was versus how small this one was, maybe it was like half as big or something. This one, tiny in comparison. And it's not this move either, which was a normal move. You know, we didn't do this move here. I guess we made that kind of in a weird way. It was a little bit more, but it wasn't exactly the same kind of move because this kind of move was a average pullback. You could say it was a corrective wave, and the average corrective wave that was responsible of doing of continuing every single time we've ever made that pullback, we've always continued, and we haven't seen much of that here. I guess you saw it once right here in the middle, and what it did on the bottom it produced on the top after being separated by this amount of movement, roughly. And you could even say that the same goes for this area in here. That what we did at the beginning was certainly continued beyond in every regard. And I was just wondering, like, at what point did a smaller triangle do anything but create a bigger one? You know, at what point did we ever make anything but a bigger triangle? You know, because the smaller triangles have always led to the big ones. You know, and at this point, we're breaking a red-yellow line, which is kind of important. And, you know, that could result in some serious change. Perhaps the characteristics of this environment could change. I expect them to at some point here, so we're not closer to the beginning than the end. Certainly eager to run to the red-yellow line, but the pause right below the POC, you know, that POC has been crossed over so many times, and it is the red zone of a range, not a green zone, but the red zone. Everything that's ever seen that green zone's been bought up so quickly back to the red zone. It's interesting. Now, the amount that it's been bought back up has been diminished every time. Like you could see originally, when it came up off the green zone, it went this much through, then it went this much through, then this much, and now we've managed this much so far. But every single time that we've managed to do this movement, it's come less and less. But they've managed to get it from lower and lower. Still, everything has been bought back up to the equilibrium every time. It's like what I think that this is descriptive of is that, you know, they may have bought it up to this point originally and the people have taken it past it, and then the people have taken it past it, and then the people have taken it past it, and there's less of them every time. Because less people will have the patience to continue, you know? It's nothing to those that are still holding from below, but it is the case that it's been constructing patterns that have otherwise looked like bearish reversal patterns, and they haven't really played out very well at all. As much as it looks like this head and shoulders has worked out, it really hasn't. It's given people a lot of trouble. Like if you think about it, it didn't produce the head under the neckline. Like where's the neckline? Here? And it started that from up here. Sure. If it started it from up here, is that where it's going to end this move then? You know, like that becomes another interesting question because every other consolidation that we've ever had that's separated by what I would usually draw as triangles, they like to come back to the baseline. And the baseline might be the tip of this triangle ultimately. We can see that it's using the green zone and red zone. This area kind of distorts it. I'm gonna make them a little bit darker so that they're not incredibly visible because these areas on the short term need to stand out. They're the ones that I drew in today. That's representative of the overnight consolidation. Also, I cannot help but notice that the similarities from the low, after having looked at this, to the movement that we have right now is incredible. Does it lead to the same pullback? Take a look. Like this movement right here, it's not exactly the same, but it's almost like it's trying. And as a result of having made that, what did it decide to pull back? This much. So when I see that, I see a lot of similarities, you know, which is intriguing. Because what was its purpose last time? Well, it was to reverse a downtrend. Really? Well, it was to reverse this downtrend. And I can't help but notice there's incredible similarities to what we have going on right now. The time is what I'm looking at. How much time did this take? Not the same amount of time. half. That angle could be seen on the bottom, kind of, not really, but perhaps if we look at this bar as a medium bar where it decided to spend the most of its time, is it not true that to begin this range, we spiked out of it this much? On the other side, how much did we spike? Is that weird or what? Why did it decide to spend so much time inside of this range after? Let me remove the triangle just so you can see. Like it was something that it made the middle and then stayed in it. Or no? Did it not make it the middle and stay in it? Like, I mean, it made it the middle by making things even around it, and then it strictly adhered to its confinement area, and it just so happened to be the other confinement area that it did last time. So suspicious that that spike also was at the beginning, and that this spike was at the end, maybe? I'm not too sure about that one, but it tried. At the end of the day, there was a report there, so consolidation for the report was necessary, I suppose. But at the end of the day, it's incredible how similar this amount of space was related to this in the past, and it took that over and used it again. So what else could be similar? The amount of distance that this amount of consolidation could be responsible for making? Like that's an interesting concept. Because who's seen me draw this before? You know, an interesting way to make a pattern. And it's kind of backwards, not gonna lie. You want to know what the difference is? Is it's done this. You see the difference? This is what we've done today, separated by this movement. And not usually does it do this. Usually it's slow in the middle and fast on the outsides. But I cannot help but notice that it is fast in the middle and slow on the outsides today. It's just a fact. And I'm like, wow, it is changed. It is different. This is not the way that it usually is. You know, and I'm like, okay, well, you can see that in this original example, it's usually like this. Okay, so what it does on the bottom happens on the top, right? And that's the simple thing, the fact of the matter. And I'm like, okay, look at the first bar. Well, what we did out of the bottom did come out of the top. Like I'll take everything else away for a second so we can just look at that. Because I think it made a serious, a strong effort to make that the case. And sure, it's not a nice move or whatever, but it is that move, and it was the beginning, and that is the end. And that was the end of it all. And when it finished that, that's when everything ended. And I'm just like, okay, well, God forbid we prevent it from doing this process. We could think it's doing something else, but it's best to wait for it to end. And like, look at this one. Like, it's true that the same thing that we used to make things go up before was what we just used again to break the same kind of confinement area that had the same kind of red-yellow line to get things rolling. And we're going to be looking at a 61% retracement up here in no man's land with no volume. So that explanation, it's kind of advanced, sure. It's kind of advanced. I will do more explanations on this, but this was the preliminary teachings that needed to be understood before before really getting involved with this, because this is it's like a crappy version of this, to be honest. Usually it's like, oh, look at this nice movement. We can expect it to pay us like that much when it's done this consolidation area. And I mean, like today, it's like, yeah, you get nothing at the beginning, and we'll give you nothing at the end. And for what I mean by that, it was basically 25 points at the beginning and 25 points at the end. And here we had the same 25 points at the beginning, or 30, basically, give or take, 27 points. And we did that at the end. But, it lacked a consolidation. It's like the components were reversed. It's like first in the range. Yeah, I'm like, when did it ever make that consolidation? Never. It was always moving differently. So it just goes to show it can move completely different while confined within the same distance and time and have the same equality on both sides, yet it can be completely different on the inside. Yet it won't budge a move outside of the top of that channel or a move out of the bottom of that channel. And the same thing goes here, or what it does out of the bottom, you can expect it to do out of the top, like a smaller version of what it did before. You know, like, do you see how it went out of the top and bottom by this triangle? You know, and it made it again out of the top. So the first move was here, second move was here, and what I find remarkable is there's a good chance that I really wonder if what could happen in that circle. Just out of curiosity, I will leave it there. Not really a level that's been incredibly important in the past, but I'm curious if it will be. Because it's only the relationship that it had on the other side of the spectrum, and I think that it's getting increasingly difficult to make things even out of the bottom of this bar. Wouldn't you agree? Like, what would we have to do to make this spike out of the bottom of this? Well, it better get going, right? Because it's, every time that it goes on, like, imagine it takes an hour. How much farther will it have to drop? You know, like, let's say it took to here, and we wanted to see it get to the other side of that blue bar. Well, it would have to fall all the way down to here to get there. Let's say it took even longer. How much farther would it have to go down? I'm like, well, that's what I mean. It's starting to become unrealistic for it to be able to expand, is it not? And it would be asking it a bit much to continue doing that. So what's the end of it? Could we make this movement on the other side like we did here? I know things have been small, but with more people out of the way, we might be interested in actually moving a little bit faster. It's an idea. It's definitely an idea. I don't think that the day's gonna get slow and stay slow. I think we're gonna try and move on out of this area. And an appropriate time to do that would be when things start to get unrealistic to continue doing what we're doing. And as I've shown you, it's very unrealistic to continue expecting us to be able to make things even out of the bottom of this range. And I'm like, well, okay, well, last time we did, look at how even it was out of the bottom. And I was like, well, look at how much drastic movement we had to do in order to make that the case. And I just want to point out as well is that all that drastic movement was bought back up to the point that we're at right now, sitting on top of all of it. A fact, an interesting one. So I'm like, well, as much as that was a bearish environment and everything like that, did it not just get bought back up swiftly as it was sold off, even quicker? I know it was tough to catch and all that and everything. Not saying we were catching it. I wasn't here, but at the end of the day, it was bought back up. Whatever was difficult for people to catch, whatever seemed like a bearish environment, all of it was bought back up. And we're actually above all of that difficulty right now, which is intriguing to just be able to say that that's the case. As much as people from down there that struggled, may like none of us, but people that have were part of that. I'm not going to say it was easy for everybody to catch that low, because look at how many of them caught it. This is literally proof that barely anybody was part of it. In comparison to the majority of the people that were stuck in these ranges. So it's that's an interesting one to consider. And of course, throughout the entire environment that we have here, I know I've got a lot going on this chart and everything. I'm just going to show one more thing. Uh, we have been vigorously expanding ever since we've started this range. And it has come to the point where it is getting difficult to continue to expand to the downside. Upside, maybe not so much. Downside, a little bit much, I would say. This is a controversial level. It has been the 61 before, like in a weird way. No, it's been the 50 before. Yeah, no, we didn't make things even out of the bottom at all, and that doesn't matter necessarily. The spikes that we've seen at the beginning of the day versus the ones at the, or sorry, at the beginning of the patterns versus the ones at the end, the smaller ones have been responsible for larger moves and larger trend breaks than the bigger. And this move right here, okay, I haven't put a trend on it, but I will now. At the end of the day, that's been difficult on people ever since its inception. Any high that's been formed on the short term has really not been too responsive to fibs, because we would have made more progress if we did. You know, like we've responded to many of these other levels along the way, like the red zone and green zone being that average size pullback that we were used to seeing here. You know, the one that started the entire move, the debatably the best price. You could say it started with a triangle, very similar to the one that we just reversed off of. And even having that triangle, what came next was this. After that triangle, we made with absolute precision a pullback exactly the same size, and then continued through the top. But remember what I had to say about this distance before? Whenever we did it, it was a continuation pattern, was it not? It was always a continuation pattern. At what point did we reverse off of making this distance? You know, it was always something else. At the end of the day, it's been a continuation since the get-go. At least when it follows one of these triangles is when it especially is effective, like a spike in spring. Like this is a spike in spring right here. The yellow line getting some attention, that's for sure. You know, and it raises a question. You know, when we did this move first before, what was the result of having made that move? Like, it took us to this high, and you could say maybe even a little bit higher, and that was the result of having come up off of that low, right? What was the result of this one? It was undeniably more. Interesting. Oh, it was undeniably more here too. Because you could see in this area here, like, look, is that not the same thing right there? And then did it not make the same kind of pullback right here? And did it not continue? Like it totally did, yeah, 100%. And it was the same thing, right? Now, why did it make more? It's interesting how much more it made. What was it doing here? And is it doing this one instead? You know, because that's how much that's starting to look a little bit more like what we're doing here. Like if I take this over here, right? Then take this over here as our triangle and our square. It's true that this produced the same amount of movement, right? Like it really bounced off of that square to get us up by this much. And it originated with this triangle before the square. As close as it was, as quick as it was, it's really butchered, but it's true, right? And I mean, is it not true that when we ended the last blue bar, this was at the low of it? And we we're a lot different on time though. Like it's like half the time, you know, to do this. But I'll tell you one thing, this trend has broken like absolute. It's not breaking very well at all. It broke that much. What does that much of a pullback usually mean again? I'm like, well, hold on a second. When we were this far out of the last triangle, or out of the last okay, another thing I am noticing that is very interesting to me is when we finished this first process, this became a B point. And it did here too. Like notice that it hit it here and it hit it here, right? So like that point was hit again. Here, that point was hit again here. It is incredibly dangerous to drag your stop into this square. Which, I mean, in this case would be down here. And that's just telling us that it's dangerous to drag your stop between the red zone and green zone, which makes a lot of sense anyways. So something that I wouldn't do anyways. Either one of them, for that matter. So, because they are the levels that have been used the most. And I just remember exactly where they came from, and that was small nodes here and here, creating the green zone and red zone. You can see them. And then we created these giant nodes where you can't even see this process going on anymore. If you scroll out, you can see that it happened originally down here between the red zone and green zone. That's where all the volume was placed, right? Back and forth between it all. But then up here, same kind of deal was going on, but it's just been overlapped by this like giant node. And that node, you want to know what the distance of that node is? That's the same distance that we had as the overnight consolidation. Oh, it is the overnight consolidation. Yeah, we need to turn that into a support level. Like, who thinks that we can't make this into a giant B point right here? That's on the agenda, I think. And what I think about that, that's a level. The 188 200. You know what? That's not hurting anybody. We'll leave that there. This one I'll take away though. Interesting that we make a head and shoulders. It's failing right now. Anybody that's part of the head and shoulders is really kind of squirming right now, which is the way the market's decided it to be. And I'm interested in levels above, so let's be careful about that. You know what? Let's take a look at the other chart. This one from yesterday. So we finally, okay, both of the lines have broken. All of the B points have been hit. This B point here has been hit. This B point here has been hit. you know it's bouncing off of the old all-time high? It's basically saying that anybody that was caught buying or chasing into this movement right here, anybody that didn't buy before the trend break, got a huge slap on the wrist, right? And that's the irony of it. Now, it's been difficult for anyone to retain or their exposure to the upside. And contrary to popular belief, presented with so many downwards moves and so much difficulty for those that have been, trying to be exposed to this upwards movement, they will think it's a bearish environment. But the highs are at more risk of breaking than the lows. So this line, it doesn't matter anymore now that it's broken, but the support line, it does. That's a line that I think we're going to be able to deal with again in the future. But certainly got some time. Or not some time, but some space between the current price and getting to that level. And it's not very steep, easy to be used as a support. The harder we fall at it, the more likely it's to respond well. And like in all reality, that trend, it's not that it's been readjusted, but it's made a new trend. And it's like, even if we break the red-yellow line, it doesn't mean we're not in an uptrend. So it could break like absolute crap. But the one thing about that break is that it can change things when we do get to it. So I am interested in that, but it's miles off, so we'll not, it's not an incredible risk right now. But I'll be damned if we don't notice it when we get to it. That's why it's going to stay red-yellow. The other one too could be red-yellow as well, I suppose. Yeah, why not? And this one is like the preliminary, and it could be fake out like originally, essentially making it a tough time for anybody that's exposed to its original break. But that's the story of it all. Like think about how tough it was for the people to be exposed to the initial break here, right? And like how many times did that downtrend? Sorry, how many times did that downtrend break before actually getting back up to the 61? And it's like, what level did it decide to go to? It decided to go to this gold bar right here. And that was a gold bar from this range, right there. It's an incredible gold bar where nothing has ended or sorry, everything has ended and began at it since we've been associated with this range. Now, I'll tell you one thing. We've managed to not make things even out of the top and bottom. Like it didn't make things even yet out of the top and bottom of this range. And it's asking a bit much of it, sure, but it presents a very attractive hedge target for it to make that the distance above it. Like this distance that we made above, we did more below. And it produced 3 spikes out of the bottom before coming back to the shoulder level of the head and shoulders. So, it is true that we made a head and shoulders, and I'll show you on the other chart. It is true that we made a head and shoulders that, you could consider this whole movement here the right shoulder, and then it came into a head. And it's like, are we doing this right now? And I mean, remember I mentioned this earlier, and I said that this middle area would be very much like the area that it goes sideways and hits 8 times.
That's a spike up with a spike down as well.
What, this whole pattern?
The whole pattern, yep.
Mm-hmm.
And
Mm-hmm.
that's a bullish pattern, I thought.
You're right. You're right. Yep, it is. With the spike being out of the bottom last. Yep. Which is it's very intriguing because that's how we have this set up so that the downtrend breaks last, and that's the final move of it all. And remember earlier I was explaining the head and shoulders to inverse head and shoulders. The last thing that it ends on is the inverse head and shoulders. Like the head and shoulders debatably did its job at making everything even out of the bottom. I know my sketch isn't even, but it took the middle, put it out of the top. It started by a move that essentially doubled. Like this move doubled here. And then it took that away and then doubled it out of the bottom. And I mean, we usually do that. But you know what happened today? Is it was absolutely terrible at coming out of the bottom. Like what we did out of the top was like twice as much almost. Literally. To what we could produce out of the bottom. Hmm. But it was similar in the sense that from the last B point that it made, this was the last high. And from the last B point that it made, that was the low. So I noticed that that was equal at least. To be honest, this is a very dangerous distance to get away from a B point, to be honest. I feel like more B points have come back after having made that distance than many others. Like think about the one on the bottom here too. That B point, it made that distance before coming back. Think about this one on the bottom. It made that distance away before coming back. I mean, like, does this one also come back after this distance? Because that's an untested B point. It's the high of the red zone. And it'll be the first that didn't. And I mean, one thing that could make that the case is the fact that it's literally outside of the range where it did that the best. So no wonder things could change if they do. But I still wouldn't put your stop above that level if you're in from below it anyways. Because at the end of the day, it is very much like it's trying to make a right shoulder to the last thing that happened, being the head and shoulders to the inverse, and now we're making that pattern right here. Where in this pattern we know it goes 1, 2, 3, 4, 5, 6, 7, 8 times across one middle point level, which in my opinion makes it a terrible pattern. But it is one pattern that we've been doing a lot lately, and it is very triangular. That's one thing I just can't take away from it. I'm like, we go through this point a million times, well 8 times, and then we hit this point and make it into a triangle. And it's like those are two things that are like unattractive. First of all, going to the middle 8 times is good for scalping and stuff, but not good for any like juicy long-term big moves or whatnot. And I'm like, well, we have that totally here. This POC marks that point that it could go through a million times or 8 times. It's supposed to be 8 times, but you can see a million times is acceptable as well. So effectively, we grow the node to be the biggest at that point. Doesn't matter if it's 8 times or however many times it hit through that point here. Like how many times do you think it's crossed through that middle point? A lot. Too many times to count, right? So the and that does remind me of what we did, overnight. We totally did that here. What do you think about this one? How many times did that get crossed? It's incredible. And now it's like, debatably we're still crossing it. It's just like we're getting even better at doing it. Everything still comes back to that line. It'll be interesting when they don't, because that will be a big change that we could say could start and ignite one of the next new big trends away from this area. So of course, it did come back down to the green or to the red zone, and it created a B point along the way. Undeniably, like a new trend has formed, and we could place it like that. Oh, also, what about a 50% retracement? 61% retracement, perhaps? No? The 50 and 61's been the most controversial point of the day so far. Curious to see how it's treated here in the green zone. We are at where would be considered the left shoulder low. Like here. And like, yeah, sure, it made the same size, but is it gonna do all of that? Because that's super hostile if it does that, no? It's like crazy hostile. How many lows does it have to jab back into before finishing it?
That reminds me of yesterday's low.
Yeah, it definitely like kind of has that wicks and spikes kind of vibe to it where there's a lot of space before the trend break anyways. Where we are in the middle of this though is very much like a medium point. I do recognize that though. Let me see what that actually would look like. Yeah, we'd be right in the middle of it. And we saw on the other chart how much when it's inside of this range, it's interested in making things begin and end at a level just like this one. An equilibrium. A 78% retracement. Is that not what we did when we pulled back earlier? You know, we pulled back very close to a 78, you know. And I'm not, or did we get that? Hold on. Like, you see that right there? That's the 78, the blue line right there. That's the 78. And then if I go ahead and pull it over to this move right here, I'm like, what are we doing? 78 blue? Kind of passed it a little bit, but it was like they were trying to catch it back up. Same kind of concept though. The really deep retracement back into the low. It's cruel, but it's true that everybody, you see this last trend break that I had in there? You know, when that first started, right? It was all the way up at the high, the very, very beginning. And from the moment that that trend broke, every single person got wiped out back to the initial spot that that trend broke. My question is, what about this trend break? And that trend break, it reads an interesting reality that unless it breaks from that point, that time, it has to break the red yellow line in order to get there. So we know that we're not going to be waiting more than this amount of time before change. And I'm like, what else took that much time? It's an appropriate amount of time, at least since this trend began. This is the low of the overnight consolidation. Like if you see the overnight consolidation and all the lows that it made here, this is literally at the bottom of that giant node. You see that that line right there, it's kind of moving around. That's the average price right now. Well, no, the current price right now. And the current price is sitting right across the low of that node, where everything below it has always ever been wicks and spikes back to this area. And, you know, it's funny to me to see if I highlight this area just as like a purple zone, right? Look at all the wicks and spikes that happen out of the top and bottom, how it tried to be even, and how it wasn't even for so long, but the last thing that it did was produce that movement out of the top. After all that trouble. Intriguing. Here's that range again. I'm going to leave that purple zone there because it does highlight like an area that we really have spent a lot of time, and it could come in useful in the future. So like last time, this trend has been broken. I'll dim it down. And what was the result of the last 78% retracement to produce? Well, is it not true that this high right here was a 61? You know, when we look at the fibs presented from the high to low, like we reversed at this level right here, right? So what could it mean to make it more than a 61 of this level? Because right now the 61 is in line with the B point. The B point's probably telling us it's a 227 to 261, which is down there. The B point's at the 61. That's fine. But this level, it's really controversial. If we manage to make it through it, then that means we're doing more than we were when we were doing the last 78% retracement, which was here. And I mean, it barely left anything below. Like, you can see what it left below in terms of volume. Like, these people were allowed to stay. Like, look at how much of them were allowed. And then look at how much was allowed in the next one. Out of this volume. Minimal. So how do you remain in from low of day if you don't allow a 78% retracement on your position? You know, who's it good for then? Well, it can't be just the people that have just went long, but you might say, well, being long was the most valuable thing so far. Even though it's made a 78% retracement, that position still does hold, and until it breaks, this won't be the best place to have traded from. I'm curious about that. Because why would they go through the same trouble again to make a smaller version of what just happened in the big picture? Because I mean, I'm not making it up. The bigger version did a 78, and then we just did the same thing. Bigger version led to a 61. The 61 would be here if it did the same thing again. Interesting, but it's good understanding to have. And like yesterday, how much difficulty will they put the people through before getting to the level that obviously fits in line with what it did before? You know, the 11 low zone can be brutal. Yesterday it was brutal. There was a threshold that was very, very far away. Like this line right here, it's not necessary that we get all the way to it to get up to this point. Like we have all of this time to get there before. needing to break the red yellow line to get there. But anytime that we get there after that line, we have to break the red yellow line to get there. And that might be a problem because not only a problem because it's going to require a lot of patience to get to the red yellow line if we don't run to it. And we'll know by the point that we get to here if it's running to it or not, because it effectively will have not run to it if it gets past this point in this consolidation. Well, like I said, if it does the same thing again, what if it does a better job? You know, I'm curious to see if we can break the sequence, and breaking the sequence would mean that this 61 wouldn't lead to another 78. I mean, God forbid it does. You know, it would be the same thing the third time in a row. So this 61 last time was responsible for bringing us down to a 78. What's funny about that is this was not a 61, was it? No. Was it a 161? Oh yeah, it was. That's strange to me. Maybe we get a 161 because it's capable of making a 161. And the move that it made off of a 161 was just one like this. And that resulted in a 161. Obviously don't have that move anywhere else, but I am curious about it. Many days I explain the 11 low zone, and I'll explain it again because I find that there's one part of the 11 low zone that could be looked at here, and it's the fake out before the play out. And you can see in the oldest versions of the 11 low zone that I've got, it makes it very clear. Like, we'll use a different one today. This one. So the point is it makes like a clear entry at the bottom, and then it goes all the way up. And then this is usually that 78% retracement that starts that grind, and then it pops and gives people hope. Doesn't quite give them the B point, right? And it comes all the way back down and grinds even more to finally get the B point. And I mean, I look at that. It is true that there is a B point that has not even ever been attempted at that low. Geez, does that ever remind me of this? You know what that means though? When we got to this point before, it was a 61, but it was also a node. It had a node. And this does too though. Like here, if it made a smaller version of this, the 61 would get recognized again, um, in a little bit of a smaller sense. So I'm curious to see if that does happen. Now I think that the end result will be different. You know, the 61 I'm expecting to be able to break at some point, not hold like it has been. And if you look at how much movement it's made in and around these green zones today, it's been relatively terrible at using them lately. You know, spiking across back and forth. But the beginning of the day, it was absolutely fine. And now, this is the first time that we've ever seen it actually attempt at trying to make a support out of the green zone without spiking through it incredibly drastically. But the spike that we did make out of it was very similar to this one. With this test of the medium bar again, creates a new downtrend. Short term creates a small time frame that we know that we could essentially see change things in the event that we break that trend line. The consolidation is certainly due to end. And I can't help but notice that the movement structure that we do have here is 1, 2, 3, 4, and 5 as of now. Could it be an M into a W? Well, only one move separates it, and it's a move it's already done. Making that W and M. It's a controversial point, I'd say. Low of the node. Initial positive response. Whatever was sold off at the bottom of that triangle or consolidation has been bought back up to it. Now today, do you remember at the beginning of the day we had two nodes and they were separated like that? And that's how we all started the ranges and all that, right? Now today, I cannot help but notice that if you look at the short term, the way that things are separated right now, like we are growing a node here and it is the same size as the one that we did do up here. I cannot help but notice that. And like, did we have one in the middle? Do we need one in the middle? Because what we did on the top is undeniably a very similar size to what we did on the bottom and a very similar size to what could be in the middle. So very interesting behind that. Obviously it is a consolidation that is right in the middle of an old overnight range, right? So that has been the pinnacle of, well no, it's been the medium point where we've returned to on every move of the day so far. Where more moves have happened above it, it would seem, than below it since the report in the morning. I think they're just trying to steal the last few positions before they go for the red yellow line. And the more people are in the way, the more we need to chop. We certainly can chop, but it's coming to that time where the red yellow line will be forced to break in order to get us to that consolidation above. We spend any time consolidating in between these two ranges, it'll be a triangle. And that's fine. You can do that. It's true that at the beginning of this consolidation at the high, it was like it made a head and shoulders that played out to what is now a low with a lower low. In the event that we make, even just an attempt at a retest, it could be a higher low. And if it looks as funny looking as what it did up here, well, it's fair game to make it look weird. That's fine. Like, think about how they have worked today in general. Like, some of the head and shoulders that there have been, if you consider them head and shoulders, they haven't really had very equal shoulder levels. Like, if you look at the beginning of this move, it's true that there are three highs, a high with a higher high and a lower high. Like, this high is first, the second high, which is the highest, and the third high is lower than that highest high. And then we've got the same thing down here where you can see low, lower low, higher low, and then up. And it did do that. But look at how weird it is. Is it as weird as the one on the top? Well, you tell me. But is it not true that both of them had three extremes and the middle one was the farthest? The middle one was the farthest every time. It doesn't care if it looks funny because it worked though, didn't it? At the end of the day, when it got to the third one, wasn't it at the most difficult? It created the biggest trend break, the third high. The third low created the biggest trend break. And it was true that this is how it made the extreme, and this is how it made the extreme while it was in this process. And until it was done, that was that way. So anything similar, I can't help but notice that we have a similar blue bar here. It's not exactly the same way, but it does mark the high with a high and a higher high and a lower high. It's true, it does. Could it be that the low is the same way? Well, it's certainly got a lot of extra time in this one that it has not used in this one. Like, it's true that it could go for a little bit longer in time if we were to push it, but is it the same size becomes another interesting question. No. Roughly, though. Similar. What the difference is just wicks and spikes. What the difference is just the average counter trend pullback. A little bit less, which is fine. And the nature of a falling wedge right now, that's what it definitely has been working on. Declining lows with declining highs, formulating a falling wedge. Okay, so the last few times that we've managed to break the trend, it's managed to come all the way back to the last trend break that it did. So whenever we break a trend, we are interested in lunging so far back to where the last trend broke that the majority of the trend is overlapped in every single regard. And in the event that we do that this time, it would mean consolidating, or not consolidating, but breaking this consolidation and getting to the high where we consolidated before. which is, I mean, it's difficult. You can see the difficulty is being presented to the people that want exposure to that to happen, and that's just the way the cookie crumbles. But it's only difficult for those that haven't held, which is ironic again. I hate to say it, but it's true. And it's all on top of levels that have been previously acceptable to buy. And the name of the game for those that have held is to find a hedge every single day. And if you have hedged, then you're waiting for that hedge to get knocked out and the core to advance yet again. If you don't have a core, then you're looking for one. That's the name of the game. And it might involve having to fight for it because it doesn't give up moves of value easily. And the first part of that fight is having the patience to wait for the right time, and then having the discipline to execute a strategy that allows you to, in some case, have to endure a 78% retracement in order to be able to maintain that best price. So it's like this is the way the market has made it in the past, and it's likely to throw those difficulties again at those that have the best price. So we can see like some of the forms of difficulty that it can throw at you is 11 low zones where it consecutively bashes the bottom of the range, making it difficult for anyone to catch a low when it keeps making a new one every single minute, right? And then the fact that when you do get off with a long trade, it pulls back 78% of the way, 78% of the time. So it's like, geez. Well, you must be comfortable with making 78% retracements on the times that you've caught the best price and that's offered you the most amount of reversal. You have to be comfortable with a 78% retracement to keep that best price. Because the price of not doing it is like, look at this schematic, right? The people that catch this point are in from the lowest point throughout the entirety of the move. Well, at least this is supposed to be a 78% retracement. This is a little drastic, sure. And what's funny is as we get higher, it can turn into this, where the retracement is less and it offers more for those that have been holding until we go into an environment where this pullback is completely eliminated and we decide to go up then sideways, up then sideways, in a very different environment to what people are used to in this environment. Because look, it's like if you're not getting a 95% retracement, you're getting a 95% retracement every single moment that you try to catch it. And when you think you've got it, it comes back 95% of the way anyways. And then if you thought you caught that, well, 95% retracement before you get it going again. Do you have what it takes to continue? Isn't it just easier to hold from the beginning? Geez, it ever is. But this is the trend break. Allowing for an attempted retest is really important. Dragging stops up is kind of a problem if you do. I left a couple B points untested below. Just trying to grab them. And just remember that all of the difficulty that anyone has had in trying to catch the break of that trend has been contained within this volume here. And to think that you're out of the woods yet is naive, I think, in this environment, because it's still got a lot of space for a lot of traps. So, minor pullback to the triangle is the least of your worries, I think, right now. Ironically, that's the case. But we have been very interested in these gold bars, I tell you. Let's take a look at the other chart, for instance. Like, you see how the gold bar on the top trend was like absolutely just like smashed so many times? You know, completely different analysis from a completely different day. But the importance of that gold bar and starting every move and ending every move at that gold bar, super important. And making everything even around it was really important too. Like everything from the very beginning moves. You know, it was even larger at the beginning, and then it did a smaller one at the end like that. It's really interesting. And then it did a larger one at the beginning, and then a smaller one at the end like that. It's kind of interesting that it did that. You know, when it did that, after it was done, it was done. Like that was pretty much it. Well, I guess you could say it hit this point, where it did a bigger one and no smaller one. The other chart, we can see it's come back to test the people out of the initial trend break. Any chasers, you know, have been pulled back to the initial point that it broke the trend. And like I said, you know, full of traps and trouble in this area until it's finished with. But I'll tell you one thing. We have actually finished that trend, and now we have this one. So the steepness has been adjusted. So it has become less steep, I guess you could say. Because unless somebody knows the inverted word for steep, like what would you say would be the inverted word for steep? I'm still trying to figure that out. But that just reminded me of that. So I'm like, it's ridiculous that there's not a word for steep in reverse. Like not as steep, you know? Like I'm like less steep, I guess. But it just doesn't do justice because you know if you're describing something that is steep, you're like, oh, it's steep. They know exactly what you're talking about. But if it's not steep, then you get things like gradual and stuff like that. Doesn't do it justice in my opinion. But at the end of the day, we can see that the steepness was readjusted, the angle was readjusted, and steepness is important because steepness is weakness. You know, and if you're grinding at a level and you've got a steep trend, we run into that trend, things can change. Obviously, everybody that was part of that change was overlapped with a very, very, very aggressive pullback. And then we basically got this next trend and it's broken too. And now it's coming back to get them. But it might not be as aggressive each time that it carries on to break a trend, as the steepness is different every single time we break it until we break that final one. We're in a downtrend. So we know that, you know, like, does it really matter that we break one of these lines? Unless we're breaking that one, we're still in a downtrend. So I'm like, all right, it's true that every one of these that breaks gets us a little bit closer to that downtrend. But but I'm like in the 11 low zone. How many trends break? You know, like you could say, how many times has a trend broken along this level right here? You know, and then it didn't even work for them after, you know, all of those trends breaking. It still went down. And I'm like, well, that's not very nice, is it? But it's true that that's how it treated them. You didn't have to be part of it in order for that to be the case, you know. And at the end of the day, we can see how violent it actually is for people to get exposure to the thing that I see most valuable. And what is the result of it? Well, if it is hard for people and people do give up, where does their positions go? Do they become liquidity to a bigger entity that is going to be there by the end of it? You know, it becomes a question, like all of these people that have been in this volume right here, do you think they're having a good time? Well, the short traders that are in there undeniably picked a really bad spot to kind of start their trade from. Like what happened up here? Why are you interested up here? And it's like now if you're exposed from any short trade that's happening there, they're undeniably making it uncomfortable. Anybody that's tried to go long has had to deal with how many lows before the trend break that mattered. And when the trend break did matter first, could they endure a 78% retracement first? Because I mean, wow, it's cruel, isn't it? Do you think that if the ordinary person had the autonomy over the market to make a position that they had work well for them, they would choose to do all of this first? Why wouldn't they just make it go up? It seems a little unnecessary, doesn't it? But man, is it ever this way? And if you look at it every day, you're like, man, it's got to be part of the process, you know? Like Got another part of the process here where we've created a B point, and there's many other ones along the way. So I don't want to say don't drag your stop above them, but if you do, you're taking a risk I wouldn't take. So in other words, be careful dragging your stops above the green dash lines. Just like if you're short, you drag a stop below that level, you're going to lose your position. Where you should be taking profit, and whatever left that you have, it should be negligible in comparison to what you've taken off. Just like down here, like you want to make sure it's safe to continue holding so that you can endure heavy pullbacks, just in case all of what comes back, it might be like this move right here, because all of it came back. God forbid you didn't take anything off. Or you took this one, all of it came back. God forbid you didn't take any off. And it's like now we're in the business of most of it coming back. So it's like, well, yes, we just made this range right here. It just proved to us that it feels the other side of that range. Doesn't mean it's not going to leave it though, but it definitely did put a target on this level right there, and it hit it, and that's fine. Nothing wrong with that. The ATR is still absolutely lovely, great for scalping. 9 points ATR in this crappy little range. Usually you'd see this be a 6 or like a 5. But it just means when we do get things going, it's going to get back to like a 15-point ATR, and things are going to be rocking on all cylinders, and it's going to be looking pretty good because most people can't take this, and you can see why. People that are in from the bottom, they're watching the show, right? It reminds me of a normal 11 low zone. Very, very difficult to catch, and I'm like deja vu on the other day where there was a blue line, and I was like, I like the blue line, I'm like, today it's the red yellow line, and I like that one, and I'm like, things will change on the other side of that line. And the interesting part about it is everybody that's contained in this node has been susceptible to danger. Like they've been exposed to danger severely, and will that change? Yes. But when is the $1 million question? We can do it all again right here and still be in the exact same position that we were just in 5 minutes ago. Could we, like, literally, like the whole thing? So I'm like,
with no risk of breaking that trend line if you just continue in that consolidation for another 20-30 minutes.
Exactly. Yep. And like, when a consolidation does end, it doubles. If we were to double it, it would cut the amount of time in half. But if we double this range, it's very likely that it would want to come back to test the highs, just like a smaller version of what just happened in here. Because like, is it not true that like this trend broke, right? And when it did that, it made that S wave. Like that was part of the retest, and it should be allowed. I'm like, I think that that's something that like, whenever something really serious happens today, we'll find this hidden amongst the movements. And this is like a 5-wave move that's itching to fail, which is interesting because lately we've noticed that just making these two kind of heavy gyrations can offer a harsh movement that then gets taken back. Like it's true that this movement right here started the day, right? And it was like really harsh, right? And it worked out really well. But like, did it not all come back to the exciting blast part? It was only these people that were like, oh, you didn't find value in the hard to get tough low area that nobody saw that was obviously going to lead to this. But if you were fighting for it, then you can keep it. But all of that part that was exciting gets taken back, and you still have to keep it. And I'm like, that's just mentally tough for people. I mean, no wonder it decides to do that. Most people can't cut it. They just can't. I mean, like, when you want to know who can, is the people that catch the bottom and trade against it. The hedge funds. Because you're not sweating buckets when it comes back to the 78% retracement. And when you're taking profit roughly down here, you're not sweating buckets about catching the low. You just take some off and then you wait for this to be profitable again. While everyone else is like, I'm going along here, sell most of my position, and then try to catch it down here again. You're playing the game that loses most people most of their money when you do that. And that's what it's trying to tell you. I mean, if you catch the low and hedge against, don't be surprised if this low holds in perpetuity and you find yourself hedging from 7 highs, in the future. And this low is at no risk of getting hit in the future. But everyone wants to keep their core so tight that they're sweating buckets over losing it every day. I'm like, that's rough. That's not a lifestyle. You look back and you'll be like, geez, I wish I just held it and hedged against it from like 2 weeks in the future. It's so much easier to hedge against a position you've been holding for ages than the one that you've been holding for an hour or two. And it's like currently making a 78% retracement on your core. I'm like, well, if the core was just, down there instead, it would be a lot less easier. You'd be like, wow, look at all these people going through all this trouble to get what you already have. And I'm like, well, you know what it was like to fight for it. You know what it's like to fight for it again. Don't give it up, right? I mean, like, unless you want to fight for it again, I'm like, be my guest. But geez, it's tough. You're going to wait through all the time. I mean, it's true that people that are in from here technically can set an alert and say, right, if it matches the alert, if the 11 low zone fails, I can then be interested in it. If you've got a hedge from the top and your core gets knocked out, it means you'll be hedging the position from the top again. You'll be trying to find a hedge for it. But you won't be left without an extreme. So that's the beauty of it, right? And I mean, this is working in favor of all the hedge funds that are out there with all the money, and the individuals are just interested in where they can get in so they can get out and try and fight for the 11 low zone again. They don't even know what's happening to them. And I'm like, wow, it's tough. It's tough. Doesn't have to be though. If you're in from the right spot and you fight for the right spot, I'm not saying that any spot that has held in the past wasn't as difficult as catching this low. How is it not as difficult as catching this one? But the one that you did fight for, you chose to give up, right? And I'm like, well, that's the reality of it. We don't have to do that anymore. And I know we're like here now at all-time high learning this lesson, but it doesn't have to be like that. We're closer to the next high extreme, and that can be what we value in catching and making our core. And obviously, what that's going to do is, like, if you're on the daily chart and it's went up, 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 and you're like, wow, I want to develop a core position from here to try and catch more exposure, that could be a little rough, right? But if you know that maybe it might reverse on the next few highs, you can say, hey, every day I'm going to focus on trying to catch the high of day on the short term and letting some run through the low of day. And don't be surprised if you repeat the process every day, every single day it comes back to stop you out. Every single day. 2 weeks, 3 weeks, 4 weeks go by. A year goes by, literally. But you catch the highs and you focus on keeping them. And every single time that you get a short-term profit, you literally take off some profit to pay yourself. Look at how much it took at the low here. These reversals um, were clear from the moment that we were making, I mean, these trends were clear from the moment that we made the highs. So it's not like the downtrend didn't exist here for all of these people at the bottom. So like for all these people that were fighting at the bottom, all of the red yellow lines that there ever were from the top, they all existed. And everybody had to fight for them here to get exposure and here to get exposure and here. It just depends. That's a nice pop on NASDAQ. Yeah, this is not a long-term chart. So if you see that, it's not because I'm reading it like that. I'm not reading it at all. But skipping through it. This is tough to be exposed to. You can see that it literally is riding on the support that makes the entire uptrend. And it's like just teetering on the ability to hold the old all-time high as a support. Which is really interesting because if we look back on the daily, I made that level, this level, that gold level, or sorry, not gold level, that white dash line that we're bouncing off of right now is that high. Right there. The old all-time high. And it's quite remarkable, really. And this isn't even the chart that I've been using, but this one, And like I mentioned at the beginning of the trade, it's like unless you're gonna have a strategy, and I don't care which one, that allows a 78% pullback, you're not gonna be able to have any of this movement. And when we left the triangle, the first thing that it did was a 78% retracement. So I'm like, well, as small as it was, everybody that's here right now, they can all endure. Well, I would hope that they could all endure a 78% retracement as clear as that one, especially with the, I don't want to say advice, but coaching that it was going to happen, really. And at the end of the day, that that happened. But then, can we all do it on a bigger picture? Like everybody can handle a 78% retracement like this, but what about like this? That becomes a really, really interesting question. Like, can it, this one's fine, but what about this one? Because if it pulls back all the way to the 78 here, it's not going to be as good as any trade that was made inside of the green falling wedge. And effectively, the falling wedge is a reversal pattern that's designed to break the trend or at least put it under a lot of pressure. So if it makes a 78% retracement, is it any different than the 78% retracements that it has been making? And remarkably, the 78% retracement today has been incredibly strong. It's been incredibly necessary as well on every single trend break that we've made almost. It's been of any kind of value. It's been presented with a 78% retracement. Now we have something that is here, something that has worked as a support level for the baseline of all of the wicks and spikes that we've started since this point. And I do wonder whether or not we make a move that ends at that baseline again on the short term here. So looking for that to happen isn't so bad. The other indexes look like they're playing the same game here too. Interesting that it made a 78% retracement, and I didn't even measure it. I just put a line there and assumed it was the 78, but it is the 78. Ironically. But I mean, ironically, my line is a little bit easier to read than the 78 is. Like, sure, I can put that in there. Do you read the 78? Do you see it in there? I'm like, geez, no, I don't see it. I see my line though, which is interesting, you know. And where's it lead to? That was brilliant. I took profit right there. It literally just went right from where I said it would to right where I said it would go. So very interesting 78% retracement.
Coming off the 261 too to that B point up there.
Oh, that's weird. Interesting. So is the B point a 61 though? That's the interesting part about it. Oh geez, it is. That's interesting. That's that B point right there. Yeah, sometimes it does this where all it gives is exactly what it depicts on the short term, and essentially it makes it a little difficult for anyone that demands more out of it, but it will effectively be an M into a W with this move. If it didn't make it, right, like if it did this and then came down and went straight back up, it wouldn't be the M into W that everybody's used to. The secondary low is kind of like the slap on the wrist, but it is part of the W. I don't know why it feels so necessary to do that, but it just loves being M's and W's. And I mean, sometimes, we would see more of this, but we literally don't. Like we see a lot of this in the consolidation. So making that secondary low, what percentage of the time do we actually get that secondary low? Well, you know what happens when we create that secondary low? Well, undeniably every single time we can create a trend. And it's the same kind of trend whether or not the first wave starts at the high or not. It is like connecting the second and fourth. And that's what happens every single time we make a 5-wave move. Whether or not it starts from the beginning or not, doesn't really matter. You know, you still get this trend line no matter how long the first or the fifth wave are. Like it could start from here and end here, and you would still get this trend. And it doesn't matter if it's like that or not. Still, this trend is the biggest problem for the whole environment. Because I'll tell you one thing, how on earth does a 5-wave move play out without breaking that line? Like, can we play it out a move without breaking that line? I mean, like, how do you get any profit out of it without breaking that line? How do you get profit without being exposed to that trend break? And I mean, like, well, we best understand that trend a little bit more, because it's serious. And I'm like, well, right now, technically, we just did that. And I'm like, yeah, it didn't make the fifth wave all the way past, but it's still an M into a W, you know? Like, what? Because you know how funky looking this one really is? Is it actually looks like this. As a mathematical fact, it looks like that. And it's a mathematical fact that you can connect that 2 and that 4. And that's what we just broke right now. Like we literally just broke that trend and it just fired on all cylinders right back up to that B point up there, which effectively creates a new one. The one on the M part, or sorry, the W part. Because I mean, if we're looking at this by the end of it all, the M that started the whole shape is as powerful as the W that ends it. And, I'll tell you one thing about making an M into a W. There's a way that it can make a triangle, and I can smell it as far as I can. Like right now, it's tough. Hitting the B point right here and hitting the B point right here, it gives you a movement that can look like that. So when we hit this top B point, if it comes back to the bottom B point, it'll give us an opportunity to draw a trend from the bottom and the top, kind of like a triangle. And I'm like, if it does it, it's best to just allow it to happen. It's like, who cares if it wants to spend a little bit of time in between the B points? If you drag your stop anywhere between these two B points, just, I don't care if you're long or you're short, you'll lose the position. And you'll become part of the middle. And I'm like, well, that's clear to me for sure. All right, this arrow, we can get rid of that. Look at all the trouble that it's taken to get back to this point, eh? Absolutely insane. You want to know where I think it's going to go by the end of it all? I think it's going to go literally to the 261 that it's made at the bottom here, but at the top on the other side of the spectrum. Because right here wasn't a 261. This was a 261. This was a 241. I think we're still going to make the 261. And it might be absolutely sniped, like just like the pinnacle of a reversal. So we have to understand that that's also saying that when we make a run on the other side of this red-yellow line, the entire thing can get taken back. It could be a huge move that goes through the high of day, and that entire thing can be taken back. All the way back to the baseline where it was quote unquote tough to catch, where you had to find value in being exposed to the red yellow line, and it's just part of the next we're making the high of where the 78% retracement is going to be probably. It's like lately what we've noticed is when we break out, it could break out all the way up to here, and the 78% retracement could be literally the high of the node. Like it could do that whole move right there. And most people won't be able to handle that. They won't be able to handle it, literally. It'll knock most of their long trades out. And it's It's like a bigger version of what just happened here. Literally a bigger version. Now, isn't it funny that if you look, it broke out here and didn't make a 78% retracement? Where did that come from? Because we're in the business of making 78% retracements, not doing less. What are we so eager to break the red yellow line? Interesting to me, because it's not a 78% retracement here. There's a 50. Interesting. 50s were used at the most controversial reversal points of the day. If we use two 50s in a row and break that red yellow line, that could be a really interesting maneuver. So like this is a 50, and then it goes and makes another 50% retracement somehow, another 50% retracement on whatever move it decides to make above this high, and then it can blast through the top. Seems like a waste of time, eh? But it is. I mean, like, look at how much of a time waster this whole pattern was right here before it offered anybody goodness, right? The goodness came after a long, prolonged period of time of waiting. And what I find interesting about that is almost the exact same time that it took to make that consolidation is how much time it took to literally come back to it. Like what's up with that? I'm like, okay, that's weird. That's weird. You can kind of see that in other places too, but so particular. I'll be damned if I don't notice the particulars and they happen again. It's negligence, right? You know, that's the way I look at it. We have to notice if it's doing something so obvious, and it's just a matter of not having checked. That's no good. And right now it's making a triangle. And yes, we've probably made this triangle before, but the best thing about the last time we made this triangle is the fact that it ended, and we will end this one as well. And it's not a triangle like what you saw here. It's a different one. It's a symmetrical triangle. And symmetrical triangles, they love to come back to the tip. You know, that's one thing. We can see it's left the tip right now. Is it interested in coming back to the tip? We shall see. If not, then we pull the magnifying glass out and we look at every single thing that it's doing because it's doing something differently. And if it's doing something differently on such a small, short-term pattern, like, well, we'll be the first to know if it's going to change any big patterns as well. So you can see its initial movement is to try and get back to the low of the node. It sucks at it though, but it's trying, which is fine. Will it produce the same kind of movement out of the high of the triangle? I'm like, that seems like it would be kind of difficult, but let's see if it can. Here's the low of the triangle. It's exactly what it should be doing as far as I'm concerned. And I mean, like, yeah, it's not much, but it's at least following the rules. So after having returned back to the tip of the triangle, or well, to the triangle, makes a new downtrend. More wicks and spikes. It's almost like it's tried to make a 78% retracement of this movement. What a surprise. You know, the best advancements that we've made today have been off 78% retracements. You know, aside from the 50s that we had in the morning. And I'll be very interested to see what it looks like to end this process. You want to know what it could look like as well? Breaking that red yellow line could be the end of this 78% retracement crap. You know, like I was saying before, when we do an 11 low zone, there's a chance that that chop, you know, gets that big 11 low zone retracement. But when we start to advance properly, that retracement can get reduced until finally we just manage to do a chop and go up then sideways. And that's ultimately what I'd like to see by the end of all of this. Which is asking a lot. It's asking for it to do something that it hasn't done in this range and something that's undeniably new. It's like going back into previous environments that have been this way. Why have we done this when we did? Okay, it's like when we did this in the past, what was the result of it? You know, is where I'm coming from here. The result, blow through the high. But the first move that we had here, it was like it kind of gave people hope, right? And it came all the way back down and it didn't get the B point. I'm like, remember the 11 low zone. Like it's in the schematic. And the what's not here is like a super clear entry at the bottom. Like a very like cuz this wasn't, I guess you could say it was a 3 drives pattern. Like the one pattern that I considered like as this head and shoulders was forming, like if you go back into today's video, like I would literally say this head and shoulders, two highs into three lows. Two highs into three lows, like that. These three lows into these two highs. It's a way for head and shoulders patterns to fail. What did I say about it before? Don't be surprised if it doubles the entire range aggressively when it's done. And what's screwed up is like it still holds the third low as the low. Yeah, it made 78% retracements and chopped the crap out of people that saw this as valuable. But man, is it ever impressive that it manages to make that 78% retracement. How many have we done here? Still breaking downtrends. This level has gotten a lot of attention. Jeez. We can be done with it soon. Let's see how much power we have on the break of this trend. Whether things are supposed to be uneven or even. Because this triangle didn't double to the downside. Huh. Undeniably, we've returned back to the tip of the triangle exactly. And that is also the downtrend. No power has been displayed on the other side of that trend yet. So we're still not in the process of breaking it, we're in the process of charging up for the break, having responded negatively to it 3 times so far. Doesn't mean it doesn't exist. Every minute that we buy with that trend is subject to being taken back on the break of it. What I mean by that, visual example, in the event that we continued to buy time with that trend, whenever we break the trend, all of that bought time gets bought, it's just like literally bought right back up. I'm like, good luck with the bot time here. I'm like, it's fooling people. That's what it is. But I'm like, all right, they can be fooled. I'm just watching the minutia of the movements because I find it incredibly interesting. Like I said, I'll be damned if it does something it's already done and we've missed it. You know, I'll be damned if it has set up like this before and we don't notice it. And if there's characteristics that are different, I'll be damned if we haven't found them. That's the idea. Like every other time it's ever made this distance, I want to be aware of, you know? And any other time that it's ever done what it's doing now, spent the time spending at a level like it's been here, any time that it's ever moved like this at this level, I want to know about it. Any time that it's ever made this distance anywhere else, what has been the result of it? Anytime we've ever used these angles, anytime we've ever used this green zone, any time we've ever used this VWAP or this node, you know, it's all information I find very. It's not a VWAP, but honestly, it may as well be, to be honest. And I could make that the VWAP if I placed it at a specific spot. I'm sure there is a VWAP there. Like maybe not one as easy as this, but maybe if we go down to the short term. Well, that actually did the job. Yeah, that's a VWAP right there. Heavy duty. Huh. You know what's interesting about this scenario right here? Well, we cannot continue to have a relationship with this VWAP unless the trend breaks. And I mean, give that half an hour, it'll be the case. Well, give it 15 minutes, it'll be the case with the red yellow line too, won't it? So I mean, like if we like trading at this level, that's been the level that it's loved trading at for the most time in the recent ranges. I mean, no level trumps this point. Like, I mean, we couldn't even put more volume. Like, I challenge them. Nobody can put more volume at any other level than we've had here today. Like, this will be the POC all day. If they move it, I'll be damned. Like, you think we could put enough? Like, first of all, I'll tell you, this amount of time in here is 14 hours of sideways movement. You think we can put more volume in the rest of today somewhere else? No. No chance. No chance. That's just unrealistic. And I mean, God forbid it ever affects one negatively for it to come back to this point. That would be tragic because at the end of the day, we can see that yes, although we are closer to leaving this point than ever before, it may decide to come back to it, you know, what, 10 more times? We shall see. It's done 10 times within the last 10 minutes. So 10 more times shouldn't be a problem, but it is it's a hell of a level. As tough as it is for the people of the trend line, that's the valuable threshold. It's coming to terms with the fact that things will have to change in order to make this confinement area end. A symmetrical triangle spikes out of the bottom of the triangle. An interest in the bottom of the triangle again, perhaps. You know, it's interesting. I see it gyrating. I guess it's on the short term. Raising the low of the node as well. Because you can see that after this point in the node, everything changes. We kind of drift off in volume after that point. And where did we just come from? Well, the other side. And the triangle undeniably just ended, and it brought us to a point where we came back to test the low of that node. That's fine as far as short-term movement goes. What I'm really interested in is getting past the tip, because we've seen that so many triangles just have absolute BS dished out until the tip is met. And it's like I have seen that so much, just complete crap moves. And yeah, okay, I guess they come back to the triangle and stuff. Sure, if you're going for that, that's fine. But you know, at the end of the day, it's tiny movement, right? Like, what is that? It's capturable, but it's nothing to write home about. Doesn't mean that if you're exposed, it's not valuable to retain exposure, but just to have an idea of how it treats the people on the short term and what's been allowed in the past. It's been allowed to just chop like crazy, make things even on both sides of the triangle. Like, not even. What we've been seeing is that it doubles out of the top. Like, we get this movement out of the top. And I'm like, well, that would take us out of the trend. That's very controversial. I'm like, well, okay then. Are we going to do the normal movement that gets us out of the triangle twice as much as we did out of the bottom and break the trend in the process? Well, that's asking for a retest. If we even dare to make the second two spikes out of the top of this triangle, coming back for that entire move, all of the exciting part about it gets taken back. So I'm like, well, the people that will be fine, ironically, might just be the people that found value in going back to the triangle. Every bit of the move in the future could get taken back to this point. As much as that sucks, it's what it does. I'm like, it's just, I'm like, what's left? These people. It's cruel though, but it's true. And not to say that it's going to happen in exactly the same way or nothing, but to have that amount of people left at the bottom is likely going to be a characteristic that we shall see in the future. Hence the need to not drag your stops up into the ranges when you do capture the extremes and you're on the underside of a trend break. Because when you have exposure to the trend breaking, and if it comes back to the point that the trend broke, that means it's not safe to drag your stop into the movement on the other side of the trend break if it's going to come back to this point. And I mean, you know what's crazy? Is these people don't even know that it's unsafe yet. They haven't experienced what it's like to have a trend come all the way back to the point that it broke. They don't even know. They don't even know what they're in for. I wish I could communicate it to them, but they just won't listen. They don't want to be here. So here we are at the trend break again. Ironically, this is a level that is not safe to be in from. Well, not to say it's not, but it hasn't been safe to be in from. A level where many trends begin and end, and I think that yeah, we're almost done with it. Almost done. I'm like, look at, if it was to be a Wyckoff, was this like phase B, the triangle bit? It's terrible if it is, but what is this supposed to be? The preliminary support, selling climax, automatic rally, secondary test, phase B into a triangle. I mean, technically, if I was to say, all right, look at a Wyckoff just for what the phases are supposed to do, not for the exact reversals within those phases, it's got the phases. It's got phase A, it's got phase B, phase C. Phase C is controversial. Phase C, it may or may not be a spike out of the bottom or a continuation of phase B. And I'm like, here, I'm like, well, phase C is off. It's off. It's awfully controversial, all right, with it being the freaking trend break, you know. So working out, I should say, for anybody that caught exposure to the red yellow line so far. Under no circumstances is it all right to make it into a loss by this point. Taking some off at the red yellow line. Allowing for a pullback to be across the highs of the triangle is acceptable, but just be careful about the retests, eh? Like I mentioned, if it wants to retest, it should be allowed. And under no circumstances should it cost you your position just because the line that just broke needs to get retested. Because that's tragic if it does. Look at the last line, right? It didn't even need a retest. What do you think? The next one's not going to need to as well as the next one? I'm like, well, one of the next few lines is getting a retest. And don't drag your stop above the lines that aren't retested. Just because it doesn't test it now doesn't mean it won't test it. That's another major thing. So we definitely keep that in mind. It's true that it can go on, make another trend break, and then come back and retest 2 trends ago because it forgot to do it. And I'm like, it's all dandy. If you can manage to take some off at the B point above and the trend break above, like I'm more attracted to this point up here, ironically, because that's the point at which the last trend broke. Okay, that's why the arrow's up here. Well, as butchered of an arrow that is, it is an arrow that points to that spot. And sure, the B point is here, and I'll mark it to sure. This one can be like a little grayed out and like, yeah, it's like abstract target, but I'm I like it more. I just do. You know, and it's the beginning of this big spike right here too. I like that. I like that right there. We can call it there. Sure. This is the red zone. If it leads back to the green zone, that can just like okay, it's not that it stands a great chance of it leading back to the green zone, but in the event that it does, it has been something that it has done so many times. Like overnight, it went from that green zone to the red zone, like I don't know how many times, too many times. More times than we've seen in most ranges this level. Over 20 times, over 30 times probably. And that's a lot. It's like, wow, that many times, really? Well, yes, that many times. Doesn't matter exactly how many times though, but if I know that it's more times than the past 10 consolidations of this size, it matters. And that's all I need to know. It's a lot. Oh, okay. I like that. And I'm like, which one? You know, but the lowest one? Yeah, the lowest one. The lowest one, you know, and the biggest one, they're going to be the ones that are going to be the most attractive because I'm like, all right, well, it's always good to get a, you know, an idea what the biggest one looks like because if you start fighting for the smallest one, you start losing money and I'm like, well, did you check to see what the biggest one looked like? You know? Because the biggest one can really be like, well, what am I going for underneath the 127? Sure, it's working out right now, and sure it might lead back to the green zone, but at the end of the day, I do like the idea of it being able to use the bigger version as well. And I'm like, okay, this one, is it responsible for assisting in the retest? Perhaps. The retest that's reluctant, the reluctant retest, the retest that may or may not happen right now, but could happen at any given time that we shouldn't obstruct it from happening. And of course, nobody would be really interested in trading from the middle of the range to get the rest of it. Like if you're going to try, you're going to try from the bottom when it's low and when it has like even a small little bit of profit target. Like I was saying, hey, at least if you can take some profit off at the triangle, whatever you do hold is safe. And I'm like, I was even saying that's a small move. But to futures traders, you can take that kind of movement. Stocks and options traders could struggle a little bit to profit off of a move that big. Unless you put in like $300,000 or something like that, then you're good to go. But hopefully, you know, the market doesn't turn in that moment and your stops hold because your broker is effectively responsible for those stops to hold. And sometimes, like if, you know, 2008, you might have had a stop in and it could have blown right through the stop. It's on your broker. It's not the law that the stop has to be filled. So it's kind of interesting. And it's like, if everybody else, quote unquote, the institutions, get filled at where your stop is supposed to be, that nobody else can be filled there, don't be surprised if your position still holds when your stop gets absolutely destroyed. And that could be the case when you're trading illiquid securities. If you're trading derivatives like CFDs or futures, it's a lot less likely that you're going to be able to get something like that. But if you're trading shares of AMD, I wouldn't be surprised, or shares of like T-Mobile or Bank of America, or just your Ford, like you might be in trouble if there's a lack of liquidity on the day that everything starts to fall apart. There might not be enough for you to get out because everybody else will be fighting for that in the moment. Hopefully you hedged. That's the irony of it. But in order to have hedged, it would have had to be part of your consideration pool, like part of your toolbox, part of your, okay, this is something I feel comfortable being able to implement given the opportunity to do it, and that's the reality. I just got to refill this drink. But I just want to add as well, I can't help but notice that we came back at the moment that we could have tested the tip of the triangle, and we tested the green zone instead. Now, of course, the B point did hit, and anybody, if you did take it off of the 188-200 up there, you did get your B point. That's absolutely fine. Now, I would say a great,
when it hit it too.
it's a good hedge though, but hopefully you didn't give up the long trade to go for that one though. That's
hell no.
that's the idea, right? As long as it was a hedge, it's good. It's a great hedge, and it was the retest of the most recently broken trend. I didn't take it, but I definitely I think it's a matter of we came back to the point that it left the top of that triangle, and you could say that we came back to the point that it tried to break the yellow lines originally. And I'm like, okay, chaser retracer, sure. Anybody that tried to chase the exciting part was overlapped, and I can see that it's tough, but that's what it took to be part of it. And I'm like, well, that's true.
Also hit the trend line. I just got a trend line going from about 1249 up. So.
All right. Let's take a look.
That, when I took those dips on the 188, below that, took it up.
1249. Oh, okay.
Yeah, just somewhere around the bottom there.
And now it's got that. It's solidified, like the trend as a trend now. Like it's like if people didn't have the one from the very 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 bottom over there, you might have connected that very very low, but it came to like test it is what you're looking at. And yeah. Yep. Now it is the trend for sure. And the 188's in danger of getting wicks and spikes out of the top of it. And I'm like, this is a B point, or this is a level where it's like, yeah, we get to the 261. It might make the B point the 61, but I don't think it'll care. That's the weird part about it. I think we're in store for change because everything that was holding us into being the way that we were, like everything that was holding us down into the previous ranges, everything that was containing us within a trend line, it's all broken now. I'm like, well, let's see what happens. This is like one step out of the, like, literally actually is one step on top of the red yellow line, one step away from everything that we were in, one step on top of all that crap in the triangle, one step on top of that big node. Yeah. It's true though, as I see it. I mean, like, what's the power of that step? Because everything that we've done has now been stepped on. In other words. And what's the power of being able to put that behind us and not have it hold us back anymore? It's huge. Well, it could be. That's the idea. Maybe things will be as they were before we got to this level. And what were the things like before we got to this level? Well, we were able to move, for one, like that, like this. And then this level came along. Not a single thing has ever happened since we've met that level that hasn't met us or made us come back to it. There's like a flat top triangle that wants to actually go through the flat top. For once. Another thing I find attractive is the doubling of the triangle. Is it like something we're gonna do right now to be finished? I think so. And even looking back, I'm like, is it not true that triangle also doubled? Like it did more, but it did double, at least. It came back to the point that it doubled. Could this one do that? I mean, like, it's not a bad thought process. I'm like, oh, well, it's true. Like, we try to step on this one. I'm like, well, if we do that again, would it not be like stepping on top of this one? As strange as it may seem, it is true that that would be the case. Look at the flat top triangle form and then break the flat top triangle high. It's like when I said it was a flat top triangle, it was just two highs. It then made the flat top and now trying to break the high. It can be a little problematic for them about it. I'm just curious myself. There is no circumstance that I don't see, like, this will break this trend at some point. It's a matter of we will have to prepare for the break of that trend. But does it matter? I don't think so. I think it sucks, the trend break. And we shall see what kind of movement it will produce on the other side of it. Whether or not it will be bought back up as vigorously as it was sold off. The high of the high of the red zone, in other words, is something of great interest to me. And making it even has been the name of the game. And I question whether or not we could at least do some of the smaller moves after this readjustment. Because it is what it is like, is a readjustment. Yeah. First this trend breaks. Curious to see if it gets bought up as quickly as it was sold off. Curious about that. Why is it happening the way that it should? You tell me. Somebody finds value in it. They got a lot of money. From the point at which it sold off, it was bought back up. But now we can see that there is a new trend. and it doesn't really change much at all. We are in the situation that we were in 3 minutes ago. Except it is true that one trend is broken and it didn't work out for the people part of it. So that's interesting factual information. That the people that were part of the last trend break were not part of it for long. And I'm like, well, what's going on there? Why is it so aggressively, violent against them? They're just trying to get a short trade going. And I mean, look at them. It's crazy. The flat top getting attacked again. Nobody's comfortable in there that's short. And it's supposed to be a red zone. It's only getting worse at being a red zone. Like, think about it. We were able to come off of it like that. Now, what's this? What's this? Now? What? We're not even held back by it at all. Now, all of that movement that we had off of it has given us a node that we can now step on top of to freaking go higher. So I hope you understand this area is very, very, very particular, and every single bit of that move was bought back up exactly how it should be. Doesn't mean you have to be part of it. These are institutional moves. They're long from the 60s. This kind of money to move the market is peanuts to them. Literally. So and I think that this push most recently was on the at the expense of most of the public. I don't think that they were responsible for buying high and continuing, but rather shorting in the red zone and then being stopped out to continue beyond. That's why I think it's necessary to step on top. Because when we step on top, people short it again. And where do they put their stops? Well, at the new high. And then what happens to them? We take them out. And they pay for the next advancement through the level that we don't want to have to pay for. Because if you're the institution, you don't want to be caught buying at the 261 at the B point. Like, no, you just took profit there. What are you going to do? Buy there? No. Other people have to buy there. Literally. How else do you think it's done? What's a better way to do it then? And you don't think that they think about it. Of course they think about the best way to do it. And they formulate that every single day. And the best way to do it is to not have to pay for the B point, but to have other people do it. So if we can convince people to short here, and maybe make a little head and shoulders or something like that, and then put their stops at the B point, that means that if we're trying to take profit at the B point, they will provide liquidity at that point if we convince people to put their stops there. And that's why we're pausing here, Maybe make a little rising wedge or something. Curious. But I do question whether or not we could squeeze people here. Like, I mean, it looks like a 5-wave move all congested up in the bottom too, which is dangerous. It's not the third wave the longest at all, is it? But that's 5 waves. And could that lead to like 2 humps and a pump kind of push? Like where we have this? Because I mean, that's very similar.
Five waves, eh?
This, oh yeah, that's terrible.
Really hard to fucking figure it out.
Yeah, and it reminds me of this one. Oh, let me drag it over. This one here, right here. It reminds me of this one that started the day, where it was literally like 1, 2, 3, 4, 5. Oh no. 1, 2, 3, 4, and 5 even here, you could say. And like I'm seeing a lot of that going on with our current schematic, with it being the same 5 waves. I just do this to show extra clarity, but the market's moving up right now. A little bit. Hit the B point. I saw that like little increase in volume as we hit that B point there too. Just like a big cycle of shares. And we're at the 241 here too, to a B point that's already been tested. And that's one thing that really stands out here too, is that yes, we're coming up on a 261, but it played out well off of the 188-200. Like this B point right down here, it's been hit before. So maybe we only have to play out to the 188-200, and that just looks like the red zone. So definitely an equal size spike out of both sides of the spectrum.
I was playing off those fibs, on both cases.
Mm-hmm.
In confluence with the red zone there, the first one.
Mm-hmm.
Red to green. Gotta like it.
Yep. Now I think it's going to try and be uneven to the upside. Like, you know how it was uneven? You know, it really has been uneven all day to the upside. If it was to continue being uneven, it wouldn't actually be so different. Like if you think about all of the movement that it's made in and around this original range, uh, it's been uneven to the upside, and then even to the downside, these spikes that it's made out of the bottom, like sure, you know, it happened out of the other side of the range, but look at how many more happened out of the top, you know, and how many and how much better they were in. Yeah, sure, it got less and less as we continued on, but that's fine. You know, the open has a lot more volatility, and the distance that's in between just so happens to be the range. But we've always done more on the top. We've always made more distance. We've always had more moves. And now here we are back on the top. Starting with this one. And, you know, that one is the last one that we made on the bottom. So we make it on the top. And so far that's been what it spent its time doing. A good question is how is it different from before? You know, I know that before we spent a lot of our time separated by consolidations. Like this movement is incredibly common, right? All right, we get that here as well. Like it really hasn't stopped trying to make that large move separated by a consolidation. And I guess the beginning part can be larger than the ending part. And that's always seemingly been the case today. Yesterday, completely different story. We've never seen this before. But today, it is so inclined on making us wait through the first half twice as long as the second. And it can end up looking like that, where this one takes, you know, substantially longer than the second half. Sure. That's my point. Visual example. So this okay. There's been two ways that we've made 5-wave moves struggle. This is the worst way to like for the people of the 5-wave move. The second worst way is a different way, where it's like mostly everything's pretty much the same with the 5-wave move as far as it goes, but it only goes to the fourth wave. And we can do this process again and again, right? Now, in both of these schematics, the people that go for the fifth wave to make them money lose money, essentially. Like, unless you're taking profit on the fourth wave, which I think it's necessary to do if you're ever part of a larger 5-wave move, and you can. But look here. 1, 2, 3, 4, 5, and we've come back to the fourth. So I see that. Oh yeah. Now remember, I did put a marker here, right? That's not a B point, but it is the point at which it broke the trend. Somewhere I do think that it's going to be ultimately interested in. But what that distance is, curious to see if it matches any kind of distances that we were making in these consolidations. Like I noticed that that was the distance of the first consolidation. When it ended, it doubled with absolute precision. And I'm like, well, it's hard for me to not, acknowledge that as a really important distance. And then it made it exactly again in the future. And I'm like, well, that distance that we saw right there was also used again here. It was almost like that was a particular order size. It's remarkable how much it makes that distance. With a minor readjustment of the trend, we do have another one at the highs. And this one here, which I do put a lot of emphasis on the one at the highs. It can be the final one to break, typically, that has the most impact in the future. However, if it's anything like the one that we had up here at the high, that one broke, right? Like this. And it came down, and that one was the final trend to break. All of these uh, bottom trends have been broken and ultimately led to it just grinding along this level. That's been the final result. So without this trend being unbroken, it really doesn't serve much of a purpose. The new one is this one. I mean, I guess it's good for retesting, as it just reminded me, but other than that, it doesn't serve a value of being able to break with new, like this is the new trend break right here. This is the one that essentially it has formed as the new uptrend. And it's significantly different to the one that we originated with. It's been readjusted from 60 down to a 41-degree angle. And of course, the one at the high is the one that is getting the most attention. The B point above that's marked as the last trend break is really starting to get a lot of attention. Also, any stops that are dragged above this high are subject to getting wiped out and should never be done, not until we step on and move beyond that level. This is a level where when we get beyond it, testing it from above becomes really important. Okay? So that one's a huge level. This is a 261. It's in danger of not working out, so we have to watch out for that. Initial negative response is fine as well. I wouldn't mind if it paused there for a bit, allowed everyone to see that it was working, and like short-term moves came off of it, everything like that. But ultimately, it just led to more chop at it, and then breaking it, stepping on top of it. So I would be aware of that. Now, of course, all of these little B points that we crossed through the high have been cleared. They're pretty insignificant. But the blue and white line is steep, and in the event that we get on top of it, it will provide a opportunity to trade back towards it. Also, this is the kind of movement where it undeniably has ran into this level multiple times, and notice that every single time that it's done that, it's been fast, fast, fast every single time, right? And how's that resulted in it? How's that worked out for it? It's not very well. It's come off of that level multiple times. Every single time that it has done it, it's been fast. And look at the way we're approaching it now. Well, it's true that it's not fast now. The one thing that is different than every other time that we've met this level. Now, it's interesting that it would meet it so fast so many times and then find the need to crawl to it like it has now. It's nearly taken 3 times the amount of time to get to it than it has from any one of the lows that you can pick on this chart. It's literally taken so much longer. And it's not like it's making it an easy time for the people that are trying to fight against it either. You know, it offers them a lot of hope off of every single one of the levels, but honestly, it's very unforgiving if they don't take profit at the levels that it specifies. That's one thing that I've noticed in this trend. So it's switched from one difficulty to the next. You know, if people don't like the fact that it's, you know, hard to catch because it keeps coming back on them, if they don't like the fact that it keeps making retracements because, you know, they have to be used to a 78% retracement, like I said, right? And at the end of the day, that means keeping your stops as far away as possible. And in order to do that, taking off some profit to pay yourself is really important. But retaining exposure to the target is important as well. Whether or not it's been a battle worth fighting, you know, the falling wedge has been something that, you know, has been the pinnacle of reversal. And I want to talk about how we have a rising wedge right now. And it is the same pattern in reverse. But I'll tell you one thing, it's completely different positioning. Like this one was at the end of a downtrend, right? And like you could see that the downtrend was nearly the entire size of the pattern before, right? And it's like this is the rising wedge. Oh, and I don't mean purple to be a bearish color or anything like that, but this is it's supposed to be red, you know, but it's not. At the end of the day, it's a pattern that is meant to work against the public as far as I can see, because it does make a uh, a lot of people go short, and you can see how it's been treating them so far. To put it lightly, it's not very forgiving. And at the end of the day, it's not like it makes it really easy for the long traders to continue holding. You know, it's like one battle to the next, right? Like, but I want to talk about one thing. Below this trend, was it not true that every retracement that we did was roughly like a 78% retracement? It was super hardcore, right? And then when we got on the other side of that trend, it got a little bit easier on them. It wasn't a 78% retracement anymore. Maybe here, but I mean, like, who's buying above there, right? At the end of the day, we've saw less, and um, it's actually going to get easier for it to continue moving up. I think that it's going to get easier with every consolidation that we make, and it's interesting. This is the first time that we've been presented with any kind of bearish divergence as well. So we have to watch out for that on the short term. The 261 hasn't really been super forgiving. Its initial negative response came back down to the red zone. And this is the third consecutive high it's made across that level, losing momentum across the process. Let's take a look at some of the other time frames. 5-minute unfazed, 15-minute, still very centralized. Yeah, it is so centralized on all the time frames. The 1 minute, as much as it can be a divergence, that can play out and literally be finished by an hour from now, just absorbed into the rest of the movement, regardless. The 261 does look like it'll get attacked again. And any break of the support of this pattern, I find it likely to be merely a readjustment, just as the other one was. And the way that we can readjust the trend can be similar to previous times that we have readjusted it as well, but it's not incredibly necessary. The most necessary thing is to get involved with the blue and white line, I think. And it's kind of hard to do. It's hard to fight a battle against the grain, but it is the case that the 261's been a pretty predominant level. And what's funny about this one is that it already has played out in the past. And where it played out to when we first hit that 261 was right back to the 200. And what's funny about that is that the 200 was the move that first played out to the B point. And then it happened again, basically right here. Short term, the trend is very steep, and a trend like that typically is not given too much regard, but it'll just absorb into this consolidation as time goes on. The the other one though, this one here, it's kind of like a blue line in a weird way. Things have been made very even around it, and it's been used as a equilibrium for every single move that we've done since we've been part of this POC, which is really interesting to talk about, because since we've started this move from the beginning, No levels had more volume than this one. Even down here now, we've managed to concentrate more volume up at this level here now than we have down here. And yet again, we're presented in this day with one node and another node. And it's been this way all day, where we've had this kind of two nodes. Like up here even, we have strangely two nodes. So like I said, the momentum could be very much absorbed into this consolidation, and it could be deemed meaningless in a moment because the 5 wave because the 15 minute, the 30 minute, all this jazz is going sideways as anything. Really easily changed, I think, ultimately. Really easily changed. So as much as it provided a bearish divergence, the trend did break yet again from the bottom of the rising wedge. We'll continue to see what it manages to produce at these highs. Whether or not we can get through that 261 is probably the most controversial level here, eh? This one. And you can tell, like it's been running into it right there. But it's hit it enough for it to be weakened down. We've got a little bit of a gap there. Getting through that gap would be nice. It's allowed to step on the other side of it too. So you got to give it some space, this much space at all times. Even now, just how much space is a good amount of space. It's not gonna leave those levels unrecognized. It is probably one of the more intriguing equilibriums of the day, more or less as intriguing as this one was. Like I think that the end of it and the consolidation that we have here, like this one down below, it's very likely that it can create a nice move. I'm in the business of it creating a nice move. So I like the idea of this amount of confinement space gave us a relatively large amount of movement. And even when we were down here, I find it suspiciously particular that from the tip of the triangle to the end of the triangle, it literally took the same amount of time to produce what? Like this movement right here. And then it did it again right there. Suspiciously particular. And the one thing that I think made it easy for it to pull back is that it was lower. When it got higher, notice that this amount of confinement area led to this much pullback. The same amount of confinement area led to a pullback, but it wasn't overall as much as the first one. And I wonder if any pullback at all is even necessary. Whatever pullback we get is likely to just be a readjustment of the trend, like I said before. Not anything significant. Fake outs, readjustments. Like think about when I say readjustment, like this line right here. I'll make it white because that's the one I'm talking about right there. Explaining with it. I'm explaining this with it, and it basically broke, and its break was incredibly insignificant. No, was it not true that when we broke that line, we just ended up right back where we broke it? Like unless you were going for it to just come back down really quick like that, it didn't really do many people too well. And what it ultimately ended up doing is taking our 50-degree angle and readjusting it to a 36-degree angle, where you can see that because of that readjustment, the amount of time that we were able to spend just chopping mindlessly at a level was nearly doubled, you know? And I'm like, okay, well, with that being the case, we've doubled the amount of time we've chopped at this node. It really puts the other POC to shame too, really. Like that's pretty intense, actually, that we've managed to move it. This POC over here is like it won't be moved, but we've seen the power of what it's like to concentrate volume at a specific level. It can literally end up looking like that. Let's take a look at the other chart. It's like, is there a green zone here or something? Not particularly. But you could say that there was the low of this range here. So like in trying to get through this range, you know, it's tried its best to get through the low of that range by moving the amount that it would need to double. Like if it doubles this consolidation, it'll make its way into that range. And I mean, that's what consolidations have been for. Like look at every time it's ever made this consolidation today. Its goal is to make that like the next consolidation. And where do you think this came from? Well, doubling this one, and this one came from doubling that one. And I mean, then we're in a different trend, you know, where that one came from doubling this one, and so on and so forth. Obviously, this one got off to a little bit of a head start there, sure. But at what point has a consolidation not doubled, you know, other than the current one, you could say? Because the current one has yet to double. But yeah, that's pretty much it. It's not like it's not going to double in the other direction at some point, though. I'll tell you that doubling it has nothing to do with what direction, but the fact of the matter is that on the end of every consolidation, there is at the minimum enough volatility to double the inside area. Like we double the consolidations, and in the history of time, this has been the case every time, or we'd still be in the last one, right? Like we'd still be in this one at some point somewhere, but it always managed to either get out of the bottom by twice as much or out of the top by twice as much, and we know it could go more. We know it could go 10 times up in the right direction, right? But at least it does one, you know, and that's the interesting part about it. At least in my experience, that's been the case with every consolidation I've ever been a part of. It's not like it can't be, you know, like cheeky about it and leave out a little bit out of the wrong side first and then go, you know, completely double in the wrong direction or something like that. But it is the case that right now we're trying to advance a little bit more past what we were. It looks like that would be, no, not quite the blue line. This leaves with a relatively serious ultimatum, I think, because so far, what it has done is not very nice to the people of this level. First, it offered them hope, and then it took it all away. And now it's amounted to a big grind where, yeah, true, the one thing that's been the case through all of those tests is that we've been on top of this line. And maybe without that line, things could change. So we'll see. If in the event that breaking that line is insignificant and just amounts to more consolidation, we can expect a squeeze. Like, there's no fast fear at that 261. Like, Wall Street is not like jumping out of windows saying that they can't sell their position. Like, they're literally not calling anybody. Nobody's in a rush to do anything. And we can see that that's really clear. You know what I mean? Because if everybody was in such a rush to sell that the market was falling on all cylinders, that nobody can even sell it because everybody's trying to sell so much that there's no buyers, that all the buyers were dried up on the initial part of the dump, that it just keeps dropping and dropping and dropping because in order to find a buyer, you've got to cut the price down so much. And that's not the situation. And like that was that situation right there, where it cuts through so many levels, and it was pretty fast about it. Like think about the process that happened here. What's the process of a trend break? Well, when we break a trend, the first step is getting to it. Then we break it with an ignition candle, right? And that typically responds to the first thing that it runs into, which is typically a volume profile node. And then we go for that retest. So it breaks with the ignition candle, goes for the retest, and then we get to the continuation point. The continuation point that goes beyond where we retested it and continues a new trend. And that right there is exactly how a trend should break when a trend breaks. You know what I would change about it? Is maybe it would actually come back and actually retest the trend. But you know what's crazy? Is most of the time that uptrends break and they break with absolute fear, they look like that. They don't look like they retest at all. They fall right off and they give nobody any chance at all to get any kind of retest. They're not like the bullish trend breaks where you see it's like, oh yeah, everybody, you can see the trends breaking. Just if you want to get in, here's just like we'll pull back for you real quick and then you can get in. And I'm like, that's what they like to do with the bullish trend breaks. They're really adamant on doing that, but the bearish ones, it's actually strange to get this kind of movement. It's easier to get it to just fall right off. Like this one here, for instance. Like you can see that one there, and then this one here. They fall off like that, like just brutal, right? And they just cracked a trend, and like literally, the majority of it is just gone instantly. Like the same thing happened here. Instantly, like the majority, like 61% of the trend was just annihilated in like a fraction of what it took to make it too. Like that's the fast fear I was talking about. And whenever, it's funny to me too when I get to see they're like really 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 slow, right? And they've stopped people out, right? And they've screwed them over, and then they're like, right, you know what we're going to do? We're going to make everyone think that it's dumping by dropping it really hard to the area that we just screwed people over. Now, it makes people think that it's actually dumping because it's really fast right here. But it's only coming back to the area that it just screwed people. And I see that being the case right now. That it's not letting the original people off with anything. And it just adds to the consolidation as more chop and a readjustment of the support line. What does remain is the blue line, but it's getting a bit steep. There's almost like there's another one here. And what's interesting about the blue lines is they're only good in the event that we can get on top of them in this case. They offer very attractive hedge targets. And what it's looked like in the past is to break above these levels and then chop all freaking night until like 3 o'clock in the morning, hit that level, and then come down to this point right here. Just because this is the point where people short the bearish rising wedge. And it's like it's taunting them. Like that's what it likes to do. It's crazy. Absolutely crazy if you think about it. Because it'll show everyone. It's like, hey, everybody, look at this pattern right here. Absolutely perfect, right? So anybody that's exposed to it pointing down and gets in, and they get all that niceness, right? And then everybody sees it happen again. It's bigger, potentially quote unquote offering more, you know. And it's like, well, why is it the case that it doesn't even offer them half as much as profit as what it offered these people? Now, these people were trading a pattern that was, half the size of this thing. This thing has only ever been able to come off this much, barely. Like here, we weren't in a rising wedge. Like it only really became apparent in these highs up here. But why has it been so crappy for anybody that's been a part of it for so long, even with the assistance of a level like the 261 that we've been shown again and again and again is capable of leading us to literally a 61% retracement, which is oftentimes the B point. And it doesn't matter anyways, but the thing is why is it so crap? Why has everything that it's ever done always come back to the POC? And that's just it. And what's funny is that's where the bulk of the people are. So it's telling us that it's not been letting them off with anything. It's likely that more people have added to the position or more people have shorted to try and chase it down because of the trend break. And all we've been doing is just chopping more in this node. And I mean, like, the rising wedge has had no impact on the fact that this node is king right now. We've literally just been going back and forth between this node and rising wedge or not. I can, it was a rising wedge here. That's an interesting perspective. And that had more of an impact than the big one, which is weird because you would think with it being higher and bigger, it would be better, right? But it's actually not even that way, so it's kind of strange. Well, it hasn't been that way, at least. What it has done is come back to the POC, which it's hit a ton of times in there. Like it's going for records here almost. Literally, when we get this level going, it's like, yeah, it really, really likes it. And now I can see that using that high, it's starting to become like a little bit much. Like when do they look like that? When is it the case that we've got almost twice as much space left? Like it seems like a bit much. I don't think that it's going to want to use all of that. That's ridiculous if it does. But it's one way to go up if it does. It is true. That'll be a new way. but I'll be damned if I don't notice if it's going to go up like that. At the end of the day, it's prone to speeding up the volatility from this point on. I think we're in a little bit of a triangle, and the triangle is going to come to an end. That's one of the first steps of this.
I want to see some big movement down. Give us a spike or something, eh?
Yeah, the triangle may offer that. What, like, many of the triangles today, like if you look at this one down here even, could, it did that. This one could be like a smaller version of it. It's been very reluctant, and I remember talking about the fairness about this range originally, because like we all know, just for some perspective here, like this purple bar is the overnight consolidation that holds the POC with the most amount of volume, and it spent 14 hours going sideways, as far as I remember. 14 hours? Yeah, 15 hours. Jeez. Anyways, another 15 hours later, here we are, literally at the same level. It almost seems 10 hours later. But when we've been here, I can't help but notice that we literally spiked out of the top so much more, and so much more distance, so many more times. The bottom, The bottom presented us with like the worst chop we ever had out of the bottom, and we kind of brought that crap to the other side of the range, really. And no joke, like it literally did. The distance, the time, everything is like the lack of volatility is, we even had, about twice that volatility. We have half that volatility right now. That's the case. The ATR could reflect that. I wouldn't be surprised if we're, yeah, back to real, back to reality, really. 4.7 for whatever time of day it is right now. Yep. It's realistic. It's been quite a squeeze though. And this is like the slow burn squeeze where it's like I don't know how many people will be like, I'm just gonna wait for it to come back around. That's probably one of the most ineffective strategies in this consolidation. It's just constantly come back slightly higher every time. Just a bit. Because anybody that puts their stop at the extremes paying for the next advancement, right? Like that's the way I see it. Anybody that's shorted and kept a stop at the extreme just has put that little bit of buying pressure at the top where none of the big players really want to have to buy. So it just puts it that little bit of an extra bit past it every time. Now I can't help but notice this also is a retest of the last rising wedge. If it has the audacity to get on top of the rising wedges, there's no way it doesn't come back down to them in this case. They're too steep. And even if we make a drastic move like we have the past few days, um, these the rising wedges that have formed early in the day, they've worked like this. Like look at how badly this one played out. Like it did, as a matter of fact, start at the bottom, which is the worst place clearly for this pattern to begin from, because it did have it at the top. At the end of the day, it made the pattern again. Whether or not you look at it like that or you look at it like this, it's still the same thing. Two trends are pointing upwards. Whether or not it was you considered the blue line or not, the market came back to acknowledge it again in the future, and just to show it was something. It did matter, and if you traded back towards it, it gave you a really good price for the decline and for the break of that trend, but and for the whole overnight session. And it's incredible how much the high of that rising wedge was neglected originally, and now we go over to it now, and you see that it's like just incredible how much it wants to use it. And this is like no tomorrow. Like I can't believe that that's we've used that like that and then come all the way back to snipe it like we did there. Not very common that we'll make moves like that. This is another trend break to mark down as like an absolutely terrible trend break. It's not an effective trend break. And this kind of movement right here is really weird too. For it to hit a retest higher like that, like an Amazon retest, not only does it make it difficult for the people that were in for the trend break, and they were in for the trend break and they were right about it and it broke, but then it comes back at a higher point and knocks everybody out, doesn't care. And I'm like, to do that and knock them out, and then to come and knock these people out as well, I mean, where is this coming from, eh? As that's new to this environment, at least. It's not like we've never seen it before, but it's not like yesterday, or it's just strange for them to give it. They've been essentially everything that the bears have had today. Like think about the first trend breaks and how initially, yeah, you could have gotten exposure to that trend break, but from wherever you were exposed, unless it was the extreme, they came back for the bulk of the people. And then they came back to try again, And look at how badly that trend broke. Like they lacked control entirely. And then now, one of the levels that you could assume is very much highly regarded by the short traders is under heavy attack right now, like big time. Like we don't have to move very hard. Like it seems like a lot of the harsh movement that the bulls are capable of providing is in store. Like it's not exerted energy to get here. Not like every other time that it got here, where it was banging on the door with everything that it had. Now they've taken a different approach. And the objective may be the same, to buy everything up to that level in hopes we can get it through it. But it doesn't work if everybody's pushing against that level. And if we can convince them to not have much of an impact or to even short just below that level, and then we give a little bit of a push, it'll be so much harder for them to fight against it. And I think that it could start a heavier push at a higher point. Contrary to popular belief, people could think that it's getting slow at the high and it's getting harder for it to move. But I think that as it knocks down each significant barrier, it will get easier to move. And that's just screwed up because it wasn't like that for years. Never did that. This is, and I assume it only does this now because it works against most people. Because most people will be looking for it to do what it's done the most in the past, and that's not the best way to do it. Like I literally say it every day. Looking for it to do what it did the most in the past is dangerous. Because it's more likely to be closer to a change than it is to its beginning. So if you're looking for it to do more of this consolidation, I would say that would be asking a bit much. To be pulling off the same distance that it has inside of this consolidation consistently all the time, it's getting easier for it not to do that. Look at the most recent pullback that we made. Why so small? Why from such a high point are they able not to pull it back so well anymore? Because anytime we have pulled back in this trend, show me a point where we've just pulled back this much. Like here maybe? But even it moved more. Even it moved more. And
on the MACD too, John, are playing out really well too.
let's take a look. I noticed the bars are not below the 0 level.
That's right, because we're going up.
And that's interesting because it's not regarding the divergences very well at all. Like, isn't it true that the whole time that it's been in this range, it's been going down here and up here and still going higher? And like, but the thing is that only works when it's been going in a sideways range. And right now we're in a trend that I think it's a form of a squeeze.
I mean, the ETR is pretty low too, but
Mm-hmm.
but it's it's pretty. I took one of my other trades there on the bottom of that the cloud just as we're starting to come up because I missed the three drive down move on the very bottom, which was the very bottom this morning.
Mm-hmm.
That Ryan pointed out to me,
Mm-hmm.
and because he took it, but
Nice.
so I said, yeah, I got in too, just off the cloud, not as slow as you did, but still, just as low, almost as low. I think it's a way of just pinpointing the retracements a little bit better. That's all. Giving you an idea. Especially like down the bottom, we knew it was going up when you know it's going up. The first retracement off of when you know it's going up, then you take advantage of it. You notice they get smaller too as you go up higher and higher and higher.
Mm-hmm. Mm-hmm. And you would
Yep.
think that would be contrary to the way people would believe. You would think it would be easier to pull back from a higher point. But it's not. and it's like sometimes it can be like, for instance, like from the highest point that it made on the day, it pulled back the most. But that's not working here. It's like whatever was going on there is undeniably not the case now. And we're here as well. I'm gonna take this triangle or arrow off because it's fulfilled.
Trades and consolidations, but each one of those basically is even as they get smaller, they're still effective and they still work for I consider at least 5 points or more or plus. So
Oh yeah,
at
for
least
hedges and
beat
stuff.
that.
Oh
Yeah,
yeah,
yeah, yeah.
for hedges.
Exactly right. Yep.
Yep. Yep. I wouldn't want to make it the business of starting your day trying to fight against a trend like
Oh,
this, but
no,
But
no.
if you've already got a long trade and you're backing it up by hedging it, that's fine. But like I
That's right.
remember,
Yeah.
even before that B point hit, I was like, oh, I want to see this point hit instead. And this is the last
Mm-hmm.
point that I think is really a threshold. Like the volume really changes after this point. It's like sure, everything we do past here might come back to here. It doesn't matter how big it is. But it's a level where all of this crap can come to an end. And we don't have to be doing this anymore while we're not in this area. That's for sure. Because if you look at this area, as much as it seems like it's going up here, it really just went sideways for so long there. Like it went sideways. Like if I draw a point here and then we see it go here, like it literally, I don't care what it did up and down. It literally went sideways to that point. Not a move for a minute. Like every minute almost touched that level. I'm like, yeah, sure, it seems like it's going up in there, but really, man, it is just tough for everybody that's part of that whole sequence.
And also, John, if you draw a trend line right from the bottom, say at around what is it, 1201, and you pull that trend line up, uh, there's really quite the separation between where the candles are and where this trend line leads to. You see how far away it is?
Yeah, it's miles away.
Yeah, it's miles away. So therefore, we're probably going to have to at least consolidate or go, a little bit before we're even thinking about going down on that one, right? So,
Yep, yep. Yeah, like I,
so
I, I hesitate to draw those ones in because I don't want people to be compelled about like working towards being exposed to them when they're so
yeah,
far away. It's like it
yeah.
reminds me of yeah.
But that's what gives me an incentive to say, oh, okay, we're far away from the trend line here. If you take this um, hedge or whatever, you take it up from whatever particular point, then we're still far away from where we should be potentially changing, and going down.
Yeah. Yeah, all that stuff that was in there could fit in here easily. That was brutal in terms of like
Yeah, that's what I mean. Like just going sideways for that length of time, right? So
yep, yep.
you get around there for a while.
Yep. One thing that like I am interested in seeing like it's kind of really trying to I think we could increase volume and actually explode through the top kind of, which would be not a surprise to me to see. That would be another interesting thing. So we do have to be careful about that. I think that the slowness can come to an end on the edge of the area, but like literally everything that's holding us back is ending here. So I'm like if we look at this as congestion and 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 it's built up energy, getting on top of these blue lines so that we can come back to them may be more important than it seems. Like short term, it's doing that one, and hmm, can't help but notice how little we've managed to pull out of the bottom of every triangle too. It's just gotten so unfair to the bears now. Like it's just I don't know. Like they barely get anything now, and it's like that's apparent to me. And whatever they do get, they better take it quick because it's taken back so quickly that they can't. It's like I can see so many people struggling with it. That's the reality of it. It's just become more difficult for them, and now it's like less and less people you can count on it will be in the way. Like they're really grinding them out, and it's almost over. I think this is the worst of it coming to an end. But on the other side of this grind, the institutions are expecting to have full control, and they're long. So they didn't do all this crap for nothing, I don't think. I think it's literally been a matter of we want to get it through the high. We want to get it through the high. Try it again. All right, let's take a different approach. But they've been firing on all cylinders to try and get it through this 61, and that's what it is, you know. Since we made this high to this low, this level has been the 61, and it's been like an iron gate to this area of volume. Like, look at what happens on the other side of that volume. It's like clear skies.
Yeah, I just wonder if we're just looking at a big W here too, right? Big delay to a W.
Oh yeah, it's true. What fib are we on
The
from
entry
that?
point.
Hold on, let me just
No,
fix.
no, I'm talking bigger, John.
Okay, interesting, interesting. Okay, that one did raise an interesting question. We are at the 188, 200 of that though.
Yep.
Hmm.
But
But
look,
we,
we have some volume up there. I mean, you know.
the 261 piquing my interest for sure. But the bigger one, could really be looking at this one. Where the B point up here, which is a B point. Oh man, yeah, no, that's not even a W either. We could be. Yeah, you know that movement right there? It reminds me a lot of this movement right here. And it started this.
If we could do that move to scale, that'd be a tremendous move.
Yeah. No, it might have the same result though, like in being the bottom and then having another hefty retracement into that move. Like, okay, what happened today at the bottom? That's today's like bottom, and we pulled back like the significant one that's on the chart that we're looking at. But when we pulled back and made that move, we nearly pulled back all the way to the low of that point, and it did it in such a really grindy and slow way, and it nearly came back to that point. And I can't help but notice that like here we had that first movement which was crisp and clear, and then after that we pulled nearly all the way back in this really slow and grindy method, where it is the case that that's the same component that we had after the first crisp clear bull flag. It spent nearly the whole time that it yeah, nearly the entire time that it spent to make this first pattern, it spent grinding to get back even more, grinding to get back to that point. And here we have that first crisp, clear bull flag almost that played out really well. Like it's in retrospect, it pulled back like that, had a sharp reversal point, and it looked like it was even part of maybe the 50. Yeah, it was the 50. Okay. All right. So that's another thing that it has in common. Um, sorry. This level right here was a 50% retracement. This level right here is a 50% retracement. So this so far has been a smaller version of what this was, which is kind of strange. Against all odds, does it break the high again? That's crazy that it's rivaling the 61 now. The entire move from the low to high. As a 61 here. I'll just mark it so we can see gold dash level. We get on top of that level, it is doing something contrary to what it has been known for. And if it increases volatility and spikes, that'll be like the finishing, like it'll destroy accounts. Some people are waiting to see if it will come around. Like I said, it was the worst strategy for this environment. Which is that like, oh, I can afford, just drag your stop up a little higher, just a bit higher, just a bit higher. That's what it's trying to get people to do. You can afford an extra 20 points, It's like, oh my God, they're just absolutely destroyed now. If it makes a huge spike, they thought that they could handle it an extra little bit 10 times. And then what if it does all of those 10 times again in one spike? It's going to screw them completely. And I'm like, well, I wouldn't be surprised to see that happen. Because it's just been a complete train wreck the entire process since we broke that last trend, right? It's been this journey where anybody that's tried to fight against it, unless they've had absolutely particular profit targets, like the first move was okay. You know, it was the 188 200 from the red zone down to the V point. Everything it's offered since then has been like, you know, the pan's hot, literally. And it's like unless you take that 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 profit, you know, you're going to burn your hand really quickly if you expect anything more than that immediate short-term profit. Anything more than, you know, than what it suggests on the short term, it's like now, it's like you can expect half that, you know, and I'm like, well, it's like it used to offer the B point. Now it's like, oh, well, what B point? It doesn't even make them anymore. It's moving so slow. And now we're at 4.3 ATR. It will change by the end of the day. I'm absolutely certain.
200 too to that B point at 12:22.
Yeah.
Yeah, blue and white line start. Yep. Right
Yep. Yeah, that's pretty controversial for sure. I do like that fib set, but the 261 though starts to become a question. Even not the 261. What about the 241? You know, just something not something higher. Well, like what we could do is continue to give people the same as what they've been given at the 188 200, which is just these tiny, tiny, tiny moves. And like everybody that's part of anything off the 188 200, it's literally the smallest movements in the entire. Like, I mean, like you can't get any smaller than that, really. But everything that is sold off has been bought back up instantly, and that's weird too. Usually it would be like, usually it wouldn't be like that. Like, how many tests of the 188 200 are we really given right now? Like, how many times have we crossed over the 188? Do we usually cross the 188 this many times? I'm like, no, something is weird about that. That is not normal. It's definitely not normal. And the volume up here is just not even growing. Nothing's happening. I'm like, it's very strange. Any kind of movement that we get away from this level is likely to have really low volume as well. And I'm curious to see if that just gets eaten back as well. We've just broken a smaller short-term trend. I guess you could take like one of these trends over here that we're not really using, and we can monitor how it's managed to break them. You know, they're not very significant. They haven't managed to amount to much significance. Like, look at how much each one of these trends have broken and what it's offered people that are part of it. Like, any options or stock traders that have tried this, if they've decided to, oh, maybe I'll wait for the next time it tries to break the trend, like, think about what's going on right now to them. They're absolutely getting fried. And they have all the time in the world to put their stop at the high, and it's them that are paying for this trend to go higher constantly. I think that.
The trend line started on 12:49,
Mhm.
and I took it up, and it just went to it and stopped and went back up. So it hasn't really crossed it.
1249 down here.
Yep, right there. You take that up. There.
I like that
The
trend
yellow.
too.
Yeah.
The yellow one, yep.
Got pretty close to it, but still never hit it. So, and if you look at the 1 minute RSI too, you'll see that you know it's the 15 slowly just going up, and the sort of 1 minute's kind of lassoing around it.
It's kind of strange, man. We don't see that usually. That many tests is weird, eh? How many tests has it tested it? Like from one side too, eh? It's like really weird. Usually, yeah, very like when do we see that? Usually it's a little bit more, it's got a little bit more breathing room between each test. This is very strange to see that. Now we did get on top of the blue line. Everyone was eager to sell it right back off to the blue and white line, and that's fine. It'll give everybody another opportunity. It's very unlikely that they make it as easy as that just to trade back to the blue and white line. I think that The yellow lines are pretty steep. They need readjustment. And it's like this whole trend has somehow managed to get to where it is on a what degree angle? Like it's still steep. 39 degrees, still steep. And I mean, every trend that it's managed to break before has been steeper and amounted to it going higher. So I'm like, wow. Interestingly enough, we've made pretty much minimal progress on getting closer to the red yellow line. Now it's doing that thing again where the people that first shorted the 188 were given barely anything, and now it falls off to the point that they originally shorted and makes it seem like it's dumping, but it's not even letting the first people off. You know, the first people that shorted this level, it's like they could still be holding. It doesn't really do them much good if we fall back to the same price that they originally shorted. And if the bulk of the people originally shorted at that level and we just fall back to the same level that they're in, it just basically gets more people to like more people think that they're missing it. They add to it. Where are they going to put their stops? Same spot as the people that originally shorted this 188. They're still waiting too. They're just getting more people to short it. More people, they're going to put their buy orders up here. And then when all of the people have shorted it and there's nobody left, they think to short it. What they do is put a little buy order in and it triggers all of these stops. And I'm like, well, all of those stops up there are buy orders. Now, if you were trying to sell something at a really good price, this is how you get people to offer you their shares so that you can sell. Maybe you're trying to offload like billions of dollars and you need people to sell to. Well, what a better way to create buyers than to do something like this? So it's like I see the people are being used to create liquidity. It's not really good for the people that are deciding to make trades from this area, but you can see that they're part of the node. The trend broke. We'll see if it turns into a retest as quickly as it was formulated. And it's also in the case.
Down to that. I was just saying, John, if it came down to the V point, it would actually coincide with your trend line going up.
Well, the one problem that I think that it has right now is that a lot of people have been stuck in it for so long and treated so badly that given the opportunity to take profit, there's a good chance many of them will. So, given the opportunity to hit the low of the node, a lot of people will be trying to get out of losing trades, I think. Which, I mean, is another force against its ability to go down. Like right now is kind of relief for a lot of people that have been losing on that upwards move. Anybody that shorted the 188 200 is definitely in profit now. And this is the POC, notorious POC, where yet again everything is even on both sides.
Even when you see a spike like that and it's at a major 188 fib,
Mhm.
or 261, you have to take it into serious consideration. You know,
Mhm.
these spikes aren't happening for no reason.
Yeah, they definitely stand out amongst all. And it just so happened to be a spike above the blue and white line as well. Another point that I find intriguing to get back to is literally this point right here. Deja vu.
It looks like it maybe a millimeter away from that V point. I mean, it just almost hit it.
It means all the robots weren't able to take profit there. Like if you programmed a robot to take that pattern off the 188 200 to get to the B point, didn't work. You know what I mean? So a lot of people do that nowadays, especially with AI out there and everything. So
I'm waiting for that to come out. That AI trading bot.
yeah, oh yeah, people are trying to make it for sure, and
Yeah,
it's gonna lose them all their money.
I wouldn't underestimate those AI guys. You know, they learn. They go back to the 30s and put that all in there. So
Yeah, but remember, unless all of the people are using the AI, it's run by people, and unless the AI understands people more than we do, I don't think it's going to stand a chance. I think that the major players have been using variants of AI to make trades for them and to like implement strategies like when they trade on dark pools and there's uh like basically computers making trades quicker than a blink of an eye where they can buy and sell in a trade, exit a trade fully by buying and selling uh quicker than you can click your mouse, and it's like trillions of dollars. And those that like they're very similar in a sense, but it's not deciding where to make the trade. They're still monitored by human beings, and I think that that's basically what it is a mix of the two. Because if you let the AI completely have control, when it's broken, you won't know how to fix it. It's impossible to know how to fix it. You give every bit of your control over to the AI then, and everything that you've ever learned or worked for is useless.
it learns every day in minutia. And that's how it is able to
I
figure
just
things out. I think.
I just don't think it's going to be smarter than the teams that we have that have been around since the 30s. Sure,
Well, they're beating chess champions.
yeah, I don't know. I don't know. I don't think that they're
You
going
know
to
what I mean?
beat. Yeah, sure, chess champions.
And
That's
they've
fine.
learned from like there's a billion moves or whatever. But
Well, this is the hardest industry in the name of humanity. There's been no more difficult thing to do. And I mean like can they do that? Sure. Can they make the Mona Lisa, you know, like as impressive to a human being as you know, as we made it to us? Like can it create artwork for us that we will put in our museums that is as impressive as what we've created? You know, will it be able to create the next thing for humanity that we need to advance out of the technology era that we're in right now? You know, and until I see that, it's not as good as us. It's just we like to believe that it is.
it's like paper traders back in the 50s and 60s. Who would have thought that a computer could take over and do what we do now?
Oh, if paper trading, I don't even think existed in the 50s and 60s. I think that you had to make an account with a broker and get your feet into the mix of it. There was no such thing as paper trading. I think that Wyckoff only, yeah, that people would do that, of course. But yeah, yeah, I see what you mean. I see what you mean. The fifty
It's
percent.
almost made it to the bottom of the 1 minute 2 a.m. The green on the 30 on the RSI.
Oh, interesting. Let's take a look. Hmm. Didn't quite make it though. Interestingly enough.
Usually when you have that separation in the 15 and the 1 minute, it's usually good to go to see the 1 minute get back to the 15. But maybe following this downtrend down for a little bit, anyways.
Well, the short-term downtrend is at jeopardy of breaking relatively strongly, like this one. That's like.
Yeah, because it's really tight to the trend line, right?
Mhm. Yeah, it's basically gonna have to break pretty soon. Yeah, the way that I see this is pretty much every single trend break that we've ever done has amounted to just readjusting the trend so that we can go through the high again. And that's the way that I see this one. Like this arrow, as obnoxious as it is there, I do think that it marks a very attractive point for it to retrace to, which is basically where the dump began from. And I would like to think that it wouldn't take as long as it did here. But it's suspiciously particular that that is the amount that it pulled back.
It's rather quick, right? So it just kind of makes sense that it kind of goes up from here because fewer people maybe got into it because it was a spike like that. It did happen quickly.
Well, also it's another thing that I can see here. The market made it the case that anybody that tried to buy above the red zone was made uncomfortably into a loss, right? And I'm like, well, obviously anybody that's trying to buy above the red zone or put their stops above the red zone lost their positions. And I mean, like that's the case. It's not not good to drag your stops above the red zones because then you become a seller, you know, on something that we're essentially trying to step on top of, you know, and that's the way that it works. We try and step on top of the green zone, step on top of the red zone, and this is merely just under the bottom seem to be less. Like I guess we did it here, but you know, when I see the move that we're on right now, it does remind me originally of the 50% pullback that we made at the beginning of the day.
Hey, I gotta take off, John, but I appreciate you, brother.
Yeah, man. Take her easy.
Yeah.
Have a good one, Anki.
Cheers.
Weekend.
Peace.
See you, man. So for the bulk of the volume that there was inside of this node, it's basically went from one side to the next. We can see we're at the low of the entire consolidation that we had here. Basically anybody that tried to buy above the green zone, or sorry, above that red zone has been put to the test yet again. And it's true that it is like one of the worst versions of it, but it is an M into a W. It's trying its hardest to be a W on the short term. I can see it on the 15 seconds, not very visible on the 1 minute, but what can you do? And of course, other smaller levels underneath the most recent lows have been formulated as well as B points. A little bit larger on that one there. Could produce bigger fibs.
61 short term.
Mm-hmm. Should see a little bit of an increase in the ATR too. Back up to 7. Short-term B points are slightly obstructed by the red zone. Without this being a risk of breaking because it is broken, the red-yellow line gets shifted over to this one. And I don't think it's readjusted either. I think it's got 2 specific spikes out of the top. Reminds me of the other day. I think by design, it goes back to the original trend break. Which is where the arrow points. Nothing says it stops there either. Seems kind of out there, but that's the value of the break of the red-yellow line potentially there. The 188 is inside of the green zone. See how that works for the people in the middle of the range. This is the overnight node. So exactly where we spent 14 hours. All the other indexes are moving very similarly. Everything's wicks and spikes underneath the VWAP so far. The 188-200 had a very positive impact. The B points, nice to put some emphasis on those. The red zone yet again held it back a little bit. I think it's getting less and less of a becoming less and less of a barrier. I'm gonna try for the first time to make it through it. Hit the B points and such. And then it comes right back to this level most likely, so wouldn't get too excited about the B points unless you're gonna take profit there. Because effectively, if it breaks the trend from here, if it chooses to retest it, it could be at a point. It could be a point slightly lower even, you know, and that's fine. Here it is, breaking. Not bad, not bad. Of course, B points are a good spot to take some off. If you had orders there, that is, you know, they should be filled. So like I said, it could come back for the retest, you know, and it came right back to the point that I said it would. If it broke that high to hit the B point, it could come right back, and it did for the retest. and it's an appropriate trend to retest. Some trends are like, they're a little bit more prone to retesting than others. Um, this one's been lucky to even be able to retest. It's broken back beneath the trend so many times. It hasn't had a moment to acknowledge the trend from the other side. This is the best we've ever been able to do, and it's actually holding. I mean, it's like, where'd that come from, right? Because look what we did every other time. It's fired right back through the ground like explosion, right through the bottom of the trend line. And that's not happening right now for some reason. You know what I think these moves represent? They represent the full control that the institutions are trying to obtain in the situation. When it moves back and forth on the short term, hitting every single level that it's supposed to hit, unobstructed by the flock of people in the morning that don't even look at the chart, like, there's no way that all the people that trade on CNBC movements have anything to do with this, right? So, and with that kind of like strategic method where they buy into whatever they consider on CNBC and so on, it's kind of hard to be able to retain focus the entire day on the candlestick movements when they don't even talk about fluctuations in the market. And when you pull out like a technical analyst on a news show of some sort, they pull out a line graph for some reason, and it's very basic. But I suppose like that's all they really can show. But still, I just find it kind of strange. It's definitely not any of that that has to do with the movements that we're seeing here. And the precision that we can find the market does choose to make, it can't be a result of all those people. So retesting from a lower point than where we broke it, it's pretty normal with trends like this. The low of the node back to the middle of the node, perhaps. That's not so bad. It's looking like it's responding pretty well. This is all institutional movement. I think they have absolutely the same idea. Bounced off the VWAP there. Back at the red zone for another attempt at trying to break it. We will consolidate until the people are out of the way, but ultimately the goal is. And any hedges that have been made, you know, are at risk of being hit if you keep your stop anywhere lower than that break of that trend. Could involve like a 78% retracement or something like that. And on the moment that we get anywhere above that red zone, no stops are safe above the red zone. Basically, like, this is a threshold marker that I think is related to this one. And the amount of space in between is pretty large. But that's fine. Yeah, I want to see it start on slow, low volume and then increase as we get through the red zone. I think that that'll basically put a lot of volume into that gap in the middle there too, and it'll be on a squeeze. People are trying to get squeezed right now. That's the way I see it. Just like I said, look at that volume. Beautiful. Everyone's getting smoked out of the freaking water right now. Beautiful. Look at all that chunk of volume in there. Just like brrr, getting everybody. All of them are done. They're all toasted. Anybody that stood a chance at holding us back in the red zone is annihilated. We are going to let them short their position again at the red zone and we'll take them out again. This is that attempt. They think they're missing it now. So they short it again. It's human nature. It's very, very interesting. Because if we can get more people to try, then they will have to pay less to get it going. After all, anybody that was part of the short selling inside of the red zone got stopped out and is now trying again to rekindle some of that profit. And I think that the target is literally on the high of the spike. And it could take a little bit longer. You know, there's nothing wrong with it slowing down. I'm cool with that. But that jab was very much a violent one. Who thinks we're gonna go for the other little bit of the gap there? It didn't even get that. They're gonna want to get that. They're fighting people for it. It's interesting. I think that they're gonna think patience is the way to win this one. And it's interesting that they didn't make it slow first. I think that was a bad move. They tried to fire it away quickly just to see if they could get people out of the way. And they learned, again, that shooting the market up to the level that we want to break is not how you get through that level. Grinding it, I think, is. And all of the part of that grind was wiped out back to the beginning where the trend broke. But it doesn't mean they don't still have the best price. This price is not as good, which is interesting. It's not as prone to being wiped out by future pullbacks is my point. That's what the price is for fighting for somewhere in the middle. It's more prone to being exposed to future pullback, especially a level that's been pulled back to more than we've pulled back to any level in, I would say in the past 2 months since we were at 16,000, we haven't pulled back to one level as many times as we have in the past 24 hours at this level. This level's been incredibly common. And we're closer to never pulling back to it again for the longest time that we have since we started. Now a new trend exists because of this new move. It is true that there's a B point on top of the red zone. Well, it's not on top of the red zone, it's more like below. But under no circumstances was it ever attempted to get hit. And I'll tell you one thing. This area, yet again, is still unfair about the amount that it spends on the top and the distance that it spends on the top. Why so unfair? What about the green zone? Nobody cares about the green zone. It's like I guess not. But that's fine. At the end of the day, no stops are safe inside of this range. I don't even care how far away we get from it. You know how much time we spent in this range? If it wants to get back to it, it shouldn't be something that should cost you your position. That's one thing that's clear. Like I said though, we're closer to being farther away for longer than ever before from this level. Doesn't seem like it now, you know, without having hit it like 100 times and stuff, but you know, what do you think, we're gonna hit it 100 more times, or we're close to the end? I think close to the end. I'm more interested in that that arrow. The B point was hit. Finally, the green zone. It does have a short-term trend that's pretty steep, but created a little bit of some smaller B points along the lows. Looks like it's grabbing those B points real quick. The steep trend still holds. The other indexes stopped participating in this. I would suspect that this is something to consider the divergences on, where we're making lower lows and making higher lows now. Something that hasn't been the case ever since we started the downtrend. Since we started this downtrend, there's been no point where there has been a bullish divergence until now. So off of the overnight consolidations low, it's made a little bit of a pop. Because this is the low that marks the bulk of the overnight consolidation, the 14-hour one. Of course, anybody that took it off the green zone, more than enough profit on the table to consider trimming some off in the red zone. We're running into the bulk of the volume that we had up there. Allowing for the retest is really important. Keep the stop at the extreme, it's fine.
All right, I'm hopping off for the day, but I'll see you guys next week. Catch you Monday.
Sounds good.
Yeah, for sure, man.
Have a
Take her
great day,
easy.
guys.
Have a good weekend.
You too, man.
Take
Enjoy
care.
your weekend, everyone.
Take her easy. The VWAP trying to get another test there. Very close, very close. It reminds me of this pullback in the morning. It reminds me of the pullback that that pullback had, and the pullback that that pullback had, and then that one, and then that one, and then it finished by going up. But not after all those ridiculously close calls, eh? Like, I mean, how many close calls does it need? And then it's got to make a close call on the close call, like it did before. Because that's what it was. It made a big 78% retracement, then a little one, then a little one, and continued on until it finally broke the trend. And when it broke the trend, it did not need to make 78% retracements anymore. Going to grab some liquidity on the other side of the green zone could be on the table though too, so keeping that in mind. Wicks and spikes have been appropriate at the bottom of that range. Would be quite impressive if it managed to hold the 78% retracements. Anything more than a 61% retracement on any of these moves, even the smaller ones, is huge as well, because we haven't been able to do that. So like even just getting to the VWAP again is like more than a 61. And on the entire move, you can see we made it to that 61 there. So that's like a nice threshold. Man, that gives me deja vu heavily in the morning. And we totally knocked that right out of the water, which is interesting. So let's see.
Looking at the shadows and stuff like that has really helped me with hedging. Really helped me big time. Whereas normally I wouldn't even look at it when it's like this low and stuff like that. I know it's going down, but to take it back up, yeah, I feel pretty confident in just getting the points and knowing where to cut it.
On the 1 minute clouds you're
Yeah.
saying?
Yeah.
Hmm.
Yeah. It's really helped me quite a bit.
Oh,
Like
because
closely studying it for a long time.
that's interesting. Yeah, because the hedges, the way that I've been looking at it should be down and the core should be up. But if you've got it backwards and you're going long, I mean, it's
Well, listen,
fine. It's
I'm going
fine.
both. Yeah, I'm going both ways. I'm
Oh,
going
okay,
both ways
okay.
because I got 4 accounts, right?
Yeah, so you
So
started one of
if I
them.
yeah yeah
Okay, I
yeah
see.
if I get like I had 2 going this morning and then starting a third and fourth or whatever, and if I see opportunity, I'll jump on it. But
No, it's
even
huge.
though
And then you keep this account as the core from the high.
yeah yeah
Yeah, that's fine. So you got a core from the low on a different account, and you got a core from the high on this account. You can hedge both of them, which is great.
well, I'm trying to keep all 4 active now, right? And I'm able to do that a lot better now. But knowing what's going on and using the utilizing the MACD with the other confluences I have, so it's good.
Mhm.
Whereas before, I just used to look at it and say, oh, well, we're just bearish diversions or bullish diversions. But now, it's just a bit of a game changer for me in looking at it. It's really helping me. Like when I was first telling you about the RSI
Mhm.
and 50-second RSI and stuff, and looking at it that way. So, combine all of those, and yeah, it's really really helpful, especially with the settings that you have set up. Like
Mhm.
initially, when you go and put the MACD on here, it's not set up to your specifications.
No,
But
no, it's a
yeah,
lot slower.
yeah. So this is nice. I don't know how the hell you ever came up with those numbers, but hell, they work.
Mhm.
you know, that's what I'm happy about. So because when I can take my trade percentages from 40% to 60 or 70 or 80%,
Mhm. Mhm.
on a daily basis, that's game changing right there. Big
Yep.
time. Then when I get higher percentages on a consistent basis, then I can go, heavier size type thing when
Oh
I
yeah.
know what I'm, being consistent and stuff. But
Yep. Well, that's the thing. Like, you want to get all of the accounts to the position where you can trade NQ freely and then hedge against with MNQ, and that's the
yeah,
name
that's
of the
the
game.
game plan.
If you're doing it and you're not even looking at the profit and loss, or just focusing on doing it correctly, check how much you get paid after, and you won't be disappointed. So that's the beauty of it. But I've noticed that along the journey, checking the profit and loss can really make you do stupid things, because it's going from the profits that you can see on MNQ into NQ. It's like, what would usually make you feel like you've had a content day can be seen so much quicker on NQ, and you might not even be halfway to the target. So it's like, it's good to just make sure that you fulfill the trades to the end, and then you check after it's all
I
done.
don't even check it for like end of day, and I'm just
Hmm.
looking at it and saying, hey, I just want to make good trades today, and
Oh
that's
yeah.
about it, really.
Yep.
If I'm reading it, that's my sole goal, right? Is just to read it, basically be a 90%er, right? Reading
Mhm.
it.
Mhm.
That's what I'm trying to strive for. So, making dough along the way, but not big dough, but just making consistent money along the way.
Yep.
It's cool because as soon as you know 90%, then you can go to exponential dough pretty fast. So that's the game plan.
Exactly. Nice retest. Straight back to VWAP. That VWAP's, I mean, it's solid. I like it. It's about to be finished though with it. I'd like to think at least. Well, the imbalance is coming up pretty soon as well. I can't believe we're in this range of all ranges though. This is the range that it spent the most time overnight. This is the range that it spent the most time in period for like this year. I think the name of the game is going to be to step on top of the range by the end of it all. It's unbelievable how easy it will continue to be for those that treat the long trade like it's their assets and that they have to keep it. And it's your job to hedge against it. But, giving up the assets is like giving up the control. And when you've when the more profit that you have, the more it's worth working for to find a good hedge. Because the moment that you found a hedge, you don't have to worry about where to sell it, and you're fine with it making a 78% pullback because that's huge. If it makes a 78% pullback and continues on through the high, you've been able to take so much profit on the hedge and not have to buy a new long trade. Whereas everybody else is trying to figure out where to buy in environments like this one, where it's far better to be taking profit on hedges than it is to be trying to grab the bottom of an 11 low zone. Unless the 11 low zone has a lot to offer, like because there's a lot of potential on the other side of the trend break.
Hey, John, did you know Monday's a trading holiday?
Oh, is that right? No, I didn't know.
Yeah, MLK Day.
Oh, is that right?
Yeah, I just got an email from my broker, and they were saying it says in observance of MLK holiday, there are revised trading hours. There will be a trading halt at 12 p.m. Central Standard Time on Monday.
Hmm.
So there you go.
Interesting.
That's pretty early. So it's gonna be pretty crappy trade.
Yeah, most likely. Yeah, it's added some wicks and spikes out of the bottom of the green zone. Interested in testing the green zone again, I can see. It's remarkable how much speed it puts into the extreme and then makes it like slower to come back up. And I noticed that that's how it did it before. It made it really quickly, and then it's like, oh, everybody else can get this part that takes twice as much. And I'm like, well, the part that it was actually fast, was nearly a blink of an eye. and then it let everybody else get this bit. Kind of interesting to me. Came back for it all anyways, but still, more wicks and spikes below the green zone, everything being bought back up to the green dash line, or to the green and to the red and yellow line. Now it's impossible for it to be bought back up to the green zone and stay under the red yellow line. The red yellow line has basically had a couple fake breaks. And that was the same as before, you know, that the other trend had a couple fake breaks as well. And then it broke the trend, did this. So like here were the two fake breaks. And then it broke. Here it was a little bit more drastic about it, but two nonetheless get us on the other side of the red yellow line lately. And it's roughly the same kind of spike that we had out of the top of the red zone, out of the bottom of the green, roughly. The VWAP becomes an interest again. We could make something that looks like an inverse head and shoulders. The shoulder levels don't have to be at the same level though. That's one thing that I remember from this morning that was the case. And I just want to point out as well. Yeah, I was just about to say that. It was like, well, it's at the first of the three drives of this major. Yeah. Yeah, just
Monday the markets would close at 1 o'clock Eastern.
okay. It'll probably chop in a consolidation. And that's just a normal day in Canada, no?
Oh yeah, yeah.
Remarkable how close we are to 17,000 on the contracts. The price here is not that close, but where we could finish this week is very close to 17,000. I think we break it next week to the upside if we don't break it, you know, at the end of the day here somehow. But you know. So that's the VWAP there again. I took some off there. If you manage to take any on the spike down below, if you're scalping it on a separate account or whatnot, depends.
Well, there's divergence here though, you know, from the MACD.
Yep, that's what I was looking at.
You know, with three lows, yeah.
I like the development there.
last one too came very close to hitting the 15 second 30 there on the bottom.
Let's take a look. On the 15-second, you say? Sorry? Oh, yeah.
Just on the 15-second, yeah. What I'm noticing too is that there's a lot of double spikes, right? So it'll get down there, and you'll see the double spike scenario before it actually goes up. So if you go for the first one, depending on the size of your stops and what the ETR is at, but if you know you get the right position, then just.
Oh, I see that. Which is weird though, because like it's almost like it had a bearish divergence, making two spikes. Like
Yeah.
the second one almost looked like it was lower. Was it? Is it lower? It is lower. The second one's actually, the second one is a little bit lower.
Yeah.
But the price was too, though, so I mean, you can't be too hard on it. It was only doing what the price was doing, which is fine. It doesn't have to be a divergence, I guess, for it to just be a positive test of that green line. Right? You know? Because it worked, even with it being a bearish divergence, kind of. Well, it wasn't a divergence because it was just doing the same thing, but, even with it being lower, it didn't matter. This was definitely a bullish divergence, everything we could see here, though. I like the whole idea of turning VWAP into support, pushing through that as well. And I want to see like the 61 maybe get. I want to see us get through it because it's like a huge node like there now, and I've noticed that that's been the way. Like we've seen this before today, where the node is at the 61, and we run into the 61. So it's like really trying to get that to happen from what I can see. And it's just like even here, you know, when we meet the when you have a position and it meets the high and you're like, well, it's the red zone and you want to be in for something farther, but you know that it's going to come back and hit these highs in conjunction with the VWAP. It's like it becomes the idea like you don't want to sell your position off just because of a small move like that, which could be end up being wave two, literally. And it's like, well, you could take advantage of the move against it, um, but it becomes the best way to do it is to take advantage of the move as well as keeping exposure. Because or the other flip side is that if you take profit here and then try to enter from here again for more upwards movement, the next time it makes a 61% retracement or something, you can't even handle a move to the green zone without becoming in a loss. So unless what, are you going to keep your stop all the way at the low again? What's that going to look like being positioned right from the middle? It just doesn't make as much sense. So the best way to do it is to literally keep that position at the extreme and do everything you can to make as much money while you're holding it. Given the opportunity though, because we don't get to see whether or not they leave untested B points and whether or not we get really heavy levels that suggest that those B points should get hit. And in the event that the moves are a little bigger or worth taking, 9 points is 9 points though. Plenty of movement in the candles. seeing any that was sold off in the red zone, I mean, it shouldn't have been much more than to merely protect the trade. After all, with the aspirations of getting to the 61 up there, looking pretty good. Oh yeah, if you drag your stops into the red zone or anywhere above the red zone, yeah, it's gonna cost the position, which is really rough. And I'm like, well, where are you gonna get back in? Like, it's tough. You can see it just pulls back over top of it like that. And this is the whole range from the overnight session here, so 50% of the dump's been taken back at this move. Might not look like it, but it is true. From the moment we made the high up there, 50%'s been taken back. We're right in the middle. And 61 is just like upper middle. So it's, if we made what, you know, that spike out of the bottom? If we made that spike out of the top, it would be basically that much. If we did more, that would be huge. We could do more. I'm not opposed to it doing more. But for it to do more would be to deny that node that sits at the 61, because look at all that space that we went sideways there. Oh geez, that's the POC as well. So it's just like extra. There's a better chance that more people have traded at that level and they recognize that level, you know, as a level that used to be important and a level that was something, I guess, worth trading at. So they that does stand out. And I'll tell you one thing.
Volume node now.
Yep, yep.
Where the
There's
red is separate from the yellow.
and there's two of them here as well.
Yeah, yeah.
So it just bounced off the edge of that node. But what it says to me is it's unacceptable for it to allow the people that found value in buying this to get away easily. You gotta give them some trouble, right? Because it's unacceptable to be buying it. Like if this like excites people and it's extreme, like buying, it's like extreme movement at the high of a trend meeting the middle. I'm like, those are like all things that are not good things. But basically we pulled back over top of that movement, and now I think it's safe to try and rival the extremes again. The 61 is still, you know, very much on the table. I do consider the blue dash line, the imbalance, that's the threshold that can really kick off the end of week volatility as well. So far, 41% at the VWAP. It left a couple B points untested underneath here that it's interested in. Looks like it's grabbing them now. Kind of like it returned back to a triangle. Not one that we've really seen before here, but like there is one in there. And it's impressive because it's less of a retracement than we're typically used to. Today, at least the 50 or the 61. This is strange. But you know what this does have in common with no other is basically it hasn't it's the first pullback of this new trend. Could be wave 2. That's what I'm looking for at least. The 61, like I said, would be the same distance out of the top of the range to what we had out of the bottom. Just about at least.
The 1 minute came on top of the 15. Used it as support and pushing up.
Oh yeah, I see that. And at the time that it did that and it did work, it stepped on top of a VWAP at the same time. So it's just good. We'll
Well, okay,
take
Good.
take note of that same confluence there, because that was an effective one, I think. It managed to take it past the high, and it is when it gets past the high, it's in the effectively a continuation, and we'll see what else it can do here before the imbalance. Yeah, like I said before, no stops are safe above that red zone, that's for sure. Outside of the range, like if you're in from one side of the range and it makes it out the other side, if you drag your stop out of the extreme, like it's very likely that it'll come back and get you. Like it's extremely likely, at least in this environment. With this one channel that we have here, like it's basically statistically probable that every move that it makes outside of it, it comes back to it. And I mean, to this point, it's been that way all day. And, this volatility at the end of the day perhaps is capable of increasing the volatility to the point where we could get through the high. But I think that that's on the agenda regardless. It's just with there being a long weekend and so on, It does change things a bit. This is like the last event for a prolonged period of time, pretty much. The last chance, there's going to be exposure to much volatility, I suppose. Curious to see what they managed to end it at. Of course, the 61 is coming up. Doesn't look like it's going to really stop at it, but we'll take a look here. Yep. Definitely not stopping there. Well, it didn't stop there. Pause there, I suppose you could say. Now, we'll see what it can do next. It's kind of a bit much to ask, too. It's a heavy demand to expect that level to not work out properly. It's quite interesting. I just suspect that at this time, many people are not likely to fight against the trend, and
It's pretty close to 188. Almost
it,
pretty much tapped it to that B point at 15, 16. First. Yeah.
that's a weird one though too, because it did play out from there already. Like from the one, I guess it hit it off the 141. So sometimes it only comes back to the 141. With the imbalance about to hit too, that's another major thing. Yeah, it hit the 188 on mine.
Mine just missed it.
Oh, I guess it just missed it. Yeah, I see that by a fraction. See how it just came down to the 141 though? It's kind of strange. At least the initial response. Imbalance is coming up here though. I like the 261. I want to see it get to the 261 to be honest. All the way up at the top of the chart. I think they have full control of the imbalance. That initial push was like a test of the water to see how many people would obstruct it, but I think they will soon find that they can move it there easily. The yellow line might provide some difficulty actually.
Solidly then in the 198, 200, right? So
Yeah, it could get a little bit of volatility before trying to get there, but
I'm looking at it pushing up too. I mean, we're above the 15. Let's just go.
mm,
You know.
the red zone there. The imbalance should be finished now. Trying to think if anything is similar about these two environments, because we might be trying that same kind of angle again overall.
Just running into the trend line I had set up there, so lifting off from that.
Yeah, it's like it made it through that one for a second, but not much. Terrible trend break. Basically, I can turn that one down. The 188-200 might want to become support. So that could be something that, like,
Let's push it up. Look at the MACD, and there wasn't that much in the way of a cloud or anything like that, and they're all red lines, and things still pushing up. It's really nice. It's impressive. Probably because it's above the 15, but very impressive. Maybe just a third eye though. So
well, the way that it was set up right there, it does have a high with a higher high and a lower high, but I don't think that's going to stand in its way for long. Very short term, you can see an inverse head and shoulders come out of as a result of it as well. It's like a head and shoulders to an inverse, very, very, very short term.
pretty darn spiky up here.
Mm-hmm. It's going for everyone's stops.
Then push through
Mm-hmm.
on the leverage of everybody else's stops.
Pretty much everyone that shorted the 188-200, that's like the last batch of the day, clearing them out. It basically paused there for one more time, just for anybody that was trying to short it, they could get their position too, just so they can get stopped out.
Impressive move, really.
It is. It is. The yellow line is
So such indecision. When you look at the MACD on that one, there was such indecision on that. But I mean, everything was still north of zero, but still, there wasn't a whole lot there.
mhm.
But other than the fact that it was still on top of 15, but on the RSI, but yeah, pretty cool.
Yeah, it's at a 74% retracement in the entire dump now. Almost right back at where it broke the trend from. Like it's right there where the arrow points. So this is like kind of stepping on top of the 188. And it's kind of crazy that that would be a thing, but this kind of movement right here was really, it was really kind of like a new method of really making it hostile for people that were shorting it the whole time. And like that whole area that it was hostile got wiped out, and then they're building on top of that. All that's left at the bottom are just the wicks and spikes. And I mean, that's been the theme, that, you know, all the only thing that they pull back to is the wicks and spikes that barely have any volume. And they're not busy pulling back to those, then it's basically 78% retracements. Like all of these right here, basically 78% retracements, including like the major pullback across that entire rising wedge. But I believe we'll step on top of that rising wedge, turn it into support. Doesn't have to be in a rush to do it, but happening ultimately is the way I see it, yeah. Still, no stops are safe above the red zone. Coming up to the closing bell, a little bit of volatility here. The red zone getting tapped. And just blasted off the red zone there. Like I said, no stops are safe above the red zone. Market just had to confirm that. Because it made sure no stops are safe above that red zone. And it's like exactly the red zone. And it was like, yes, it understood that it was specifically the red zone, that it had to make sure no stops were safe above. And that's the end of the day. But yeah, hopefully you guys have a wonderful weekend, and I'll catch you guys later. Thanks for joining.
You too, John. Have a good one.
Hey, you too. Take her easy.
Bye. Bye.
See ya.